data are headed. And we don't think the data are going to evolve in a way that's consistent with that SCP, and they're going to have to do more.
How much do you think that the reaction function of the Fed is biased toward bigger cuts? I mean, how much do you think that that's what this signaled rather than they wanted to start big and then move gradually?
I think it's a pretty low bar to get some more larger cuts. We are very far from neutral. Powell has said a number of times that there's ample room to be cutting if something goes wrong. And you do want to quickly get back to neutral in a weakening labor market, not get back to neutral a year from now.
So median dots did this for this year and next year. The long dot did this. Came up just a touch. How are you thinking about that long dot?
Yeah, it is interesting. I do think there is that sense in which maybe neutral rates, at least nominally, are a bit higher. We wouldn't disagree with that.
What's your number?
3.5%. I think that's probably fair. We essentially have them getting back to there, like a 3% kind of terminal rate, and I think that's fair. I would worry that even if that is a neutral rate, maybe they have to get a bit below neutral even.
Paul Donovan of UBS came out and said, what did the higher rates achieve? Not a whole lot. What do low rates achieve? Even if you go back to below neutral, what are we stimulating?
Yeah.
What part of the economy?
I mean, I think high rates did achieve, bringing inflation down. I think, mission accomplished in a sense in that way. Yeah, we saw housing slowing. We should see shelter inflation slowing at some point because of that. Demand, of course, is much weaker. But of course, that also means that there has been this increase in unemployment. You would expect lower rates to eventually, re-stimulate sectors like manufacturing or housing, but it will probably take a couple quarters to see that, I think.
What did Paul call rents? The fantasy of
OER.
Yeah, of OER.
Yeah, I love that. I love the small rants, the sort of small frustrations. That
everyone who didn't go with the 50 this week has got something to, get annoyed about.
It's great.
Veronica, can we finish on housing and the price of shelter? We've had so many different views on this, that ultimately if you unlock all that inventory, that supply, prices actually might go down as interest rates get cut. How are you thinking about the forces, this channel for interest rates to work in the housing market?
Yeah, I think that is true eventually, but we're still a long way before we maybe get some kind of supply response, I think. We have seen rates coming down. Of course, mortgage rates have come down. We're watching the weekly data on mortgage applications filed for home purchases. That really hasn't picked up at all. I think the issue is that, yes, lower rates will stimulate demand for housing, but now we also have the issue of a weakening labor market and weakening consumer health offsetting that. And that might be the more overwhelming driver in the next couple of quarters.
So final question, next move, size, 25, 50?
50.
50, all right. Don't change it. Veronica Clark of Citi, it's good to see you.
Thanks.
As always, thank you so much for your views. Let's turn to this equity market on the S&P 500. We are just a little bit softer here by 1/10%. I should apologize for talking about the performance of the news conference, Bramo, but it's what everyone's thinking. Was that just a performance in that news conference?
You can apologize, and then you'd have to apologize for me too, and I'm not going to let you, because I'll tell you that, truth be told, I actually think it does matter when you take a look at how he acted in previous press conferences. I always find it interesting when they read off of a sheet. It sort of gives you a sense of what they're prepared for and what they don't want to hew too far away from.
It's true.
And there was a very particular message and a couple phrases he kept repeating, and that tells you about what he is trying to project and how deliberate that is. And to me, I think that is indicative.
It was very, very deliberate. Equity futures then just a little softer on the Russell. The small caps pulling back just a little bit. 7-day winning streak on the Russell. The small caps having their longest run since spring 2021. Let's see if we snap that in today's session. With us around the table, joining us now, I'm pleased to say, Tom Becker of BlackRock. Tom, good morning.
Morning.
It's good to see you. I feel like this narrative's gone back and forth for the best part of 2 years. Hard landing, soft, no landing, hard landing, soft landing. What is it now?
So we've got a bit of a different view than kind of Veronica's view there. So we're still in the no landing camp. So this economy to us has been a 5 to 6% nominal economy pretty consistently for 2 years now. And so some quarters it looks like inflation's a little too hot. Then another quarter growth's a little bit hotter, but you've been trading off with this economy kind of operating in this notably higher nominal kind of range than it was pre-pandemic. We think that's set to continue. The economy is much less interest rate sensitive than it was pre-pandemic. People termed out their mortgages. A lot of the spending that we're seeing in industrials is coming from kind of a guns and butter 2.0, what we're calling kind of, this fiscal policy, reindustrialization, onshoring, nearshoring. That stuff is driving kind of interest rate insensitive spending back into the economy. And we think the consumer is actually really well set up here. They've got household balance sheets in really good shape in terms of wealth. They're earning much stronger wage growth than they were kind of pre-pandemic. This is like 1990s type wage growth. And so that sets them up really well with interest income coming back into their flow. And we think inflation's settling now in a 2.5 to 3% range. Fed seems okay with that here, but that's kind of a no landing outlook from our perspective.
Can I pick out one point, the interest rate sensitivity? Is that symmetrical or asymmetrical? If we weren't sensitive on the way up, are we sensitive on the way down?
So I think if you just look at when people how much time people had to term out debt, both corporate treasurers, households, you had all of 2020, all of 2021, that debt is still pretty fixed rate for a number of years here. So we don't think there's a lot of sensitivity for a lot of the spending. And that's kind of how the economy's behaved the last couple of years. So we think that's kind of set to continue. There are pockets of weakness, and I think, a 50-point basis cut definitely is going to, bolster those parts of the economy that have been a little bit more. But overall, the economy is performing like it doesn't really get impacted by kind of these swings in rates we've had the last couple of years.
I want to put that on a reel. No landing, hard landing, soft landing, soft landing, hard landing, hard landing. I mean, honestly, that was absolutely
That's a summary of the last 18 months.
I mean, it was really absolutely perfect. It kind of brought back, flashes. This idea of the no landing is a U.S.-specific story.
Yeah.
I don't think that Germany is feeling no landing right now.
Right.
How do you sort of play the idea that the U.S. has been the dominant overweight for so long, continues to look like it's probably the strongest economy on a relative basis, yet is still at pretty high valuations?
Yeah, sure. So I think you picked on the poster child of kind of the weak man of Europe. If we look broadly across Europe, the periphery is booming. Periphery hasn't looked this good in decades. So look at Italy, look at Spain. They're doing great. Canada lagging a little bit more. Canada's more interest rate sensitive. Germany's more Russia and China sensitive. So you definitely have economies that are a little bit weaker, but their nominal growth is higher too. Their wage growth is higher too. And so you've got developed markets with all-time tight labor markets. We think the U.S. labor market's much tighter than kind of, maybe this recent rise in unemployment, begets. But you've got kind of Japan kind of firing on all cylinders, strong CPI data overnight. In the totality, we think Europe looks pretty robust. And the valuations there and the positioning are light. And so we're a macro tactical team. We look for kind of opportunities where the narrative is negative, where people are focusing on Germany, but maybe missing that the periphery and the rest of Europe look better. And so over the summer and then more recently, we've been stepping into kind of tactical longs outside the U.S. So I agree with you completely. So like the U.S. does look well held, overbought. Every time people kind of step out and go into foreign markets, there's a French election, or there's like the kind of the bungled press conference in the BOJ, and they're like, let me just go back to the U.S. We think that creates opportunity and creates kind of pockets of good pricing for us to kind of step into these strong global companies and strong indices.
No one's listening. Is it just that you look to go to places that you actually want to go to, that sort of are fun to go to? I feel like that's part of it. I've been to Japan 10 times. I've been to Greece to check out their beaches and been invested, I mean, is that basically what people are doing?
I think Americans have been spending in those places. So we just did a podcast on Taylor Swift Eras Effect in Europe.
Go on, tell us about it.
You've got kind of countries like Sweden where they had all-time high month-on-month services inflation just because she did 3 shows in Stockholm. So, and that's a lot of Americans flying over because they're like, oh, it's cheaper than going to the Meadowlands. And so I think that there is this. People are spending differently. People are not behaving like they think their jobs are in danger. And I think that the income, this last labor market report, you can say, oh, look, the trend job, the creation of jobs is a little bit lower. Hours are up, wages are up. And so that's money in people's pockets that they're spending. And I think in these foreign markets, nominal incomes are higher. So unemployment rates are low and people are making more than they were in the last decade. We think they're kind of going to start spending it more, and savings rates can come down in Europe, and they can kind of unlock a consumer that they haven't had for years.
I heard a great line the other day, and it was borderline insulting. It was, don't invest in countries with green in the flag. And Italy was part of that story for a long time. In Europe, the way people view Europe was that Germany's strong and Italy's weak, and it's the complete opposite now on the continent. When you look to take that exposure, you alluded to it just a touch. We used to talk about it through the currency.
Yeah.
But now the currency's held back by developments in China and what's happening in Germany. How do you take that exposure if you just want to get exposure to Italy specifically?
Yeah, so you can buy the index. That's what we do. We buy the local index, the FTSE MIB, get exposure to kind of the broad set of Italian companies. You've got banks in there, they're doing well with spreads coming in, but you've got a lot of kind of services-based companies that aren't exposed to kind of Russian gas or to Chinese exports. So that's the way we do it there. Since we're top-down macro investors, we focus on that country dimension. So we're going in the local, you know, we separate the currency bet from the local equity market bet. And so we can be underweight dollars, but we can also be kind of long a foreign kind of, you know, local equity market.
Got a question on the Bloomberg terminal from a Bloomberg subscriber. I think a lot of people might have a similar question. You keep referring to higher nominal GDP. Of course, higher prices have been a big factor in that. If you think things are going to hold up at these kind of levels, what's your outlook for inflation? Lisa's been talking about steeper curves and gold breaking out as well. What's your outlook for inflation?
We think we've settled in this new higher range. So
threes.
3 is the new 2. I think 2.5 to 3 here because we've had kind of a bit of a weakening after a strong Q1. But we think services inflation is going to really underpin higher inflation rates. You've got consumers consuming in a services-based economy, but you've also got a lot of structural changes. Insurance markets are kind of a multi-year repricing to kind of higher nominal valuations. Insurance rates in California going up 25, 30, 40% for households. And that feeds through into the economy. Restaurants have to raise their prices to deal with that. And so I think there are these slower moving effects that are underappreciated as people focus month on month, or, you know, was it jet fuel this month? Was it OER this? It's like, but if you look at that slower moving kind of dynamic of sticky services inflation, it's not just the US. It's happening across all these developed markets, tight labor markets, people spending more of their wage growth, and that's feeding through to kind of sticky services inflation. So China can bring down goods inflation for a few quarters like it has, and then you're like, oh, you know, false dawn, you know, we've landed.
Yeah.
But I think then it bounces back up if you get a surprise stimulus program. Draghi, I think, a call to arms for fiscal in Europe. They always react too slow, but I think in Europe, you should think that going forward, there might be some fiscal. There might be another kind of upward surprise there.
This was one of the sharpest conversations we've had this week. Appreciate your perspective. Come back soon.
Super.
I mean that. Thank you, sir. Tom Beck there of BlackRock. Let's take an opportunity just quickly to get you an update on stories elsewhere with your Bloomberg brief. Here's Danny Berger. Hey, Danny.
Hey, John. Bloomberg analysis has found that the 3 biggest U.S. money managers slashed their support of ESG proposals in the latest proxy voting season. It comes during continued Republican-led backlash against sustainable investing. In the first half of the year, State Street supported just 6% of environmental proposals, 7% of social ones. Vanguard voted against every single one of the proposals it reviewed. BlackRock said it voted for 4% in the 12 months ending June. That's down from 7% the year prior. Today is the day for those upgrading their iPhone. The iPhone 16 is available at stores in almost 60 countries. The device coming into a series of new colors with larger screens and an upgraded camera, but it will not come with Apple Intelligence. Customers will have to wait until the widely anticipated software becomes available in the coming weeks and months via updates. Bloomberg has learned that Johnson & Johnson is boosting its offer to settle baby powder lawsuits. Sources say that claimants could get bigger payouts and about $650 million in legal fees covered. That puts the settlement to more than $8.2 billion, up from its earlier offer of $6.5 billion. J&J maintains its now withdrawn talc-based powders never caused cancer. And that's your brief, John.
Danny, thank you. Appreciate it. Have a wonderful weekend. Up next on the program, we'll bring you the day ahead and the week ahead, and we'll catch up with David Westin on a brand new Wall Street week. Don't miss it. It's up next.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, you know, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends. And I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
The opening bout just around the corner, about 37 minutes away. Equity futures on the S&P 500 pulling back just a little bit. Here's the trading diary for the rest of today and going into next week. Fed speak picking up at 2 p.m. Eastern with Patrick Harker on Monday. We'll hear more from Bostic, Goolsby and Kashkari. Plus, we'll get some data for you, some S&P Global PMI data on Tuesday, consumer confidence. On Thursday, we'll get another round of jobless claims. And next Friday, PCE and new Mitch consumer sentiment. Coming up later on today, do not miss this, the premiere of the new Wall Street Week at 6 p.m. Eastern on Bloomberg TV. David Weston telling stories of economics.
EVs and why do I need to buy these things? Not true on the commercial side. They've got a big commercial operation at Ford called Ford Pro. We interviewed Ted Cannis, the head of that, and that's going gangbusters. They can't keep up with the demand because if you own a fleet of vehicles, you make money through having the EVs. When you're a consumer, you're not making money by buying an EV versus an internal combustion engine car.
So is it range anxiety versus a business proposition?
It is. Business proposition means, as I say, you'll make money because you have all these vehicles. You can monitor where they are, where they're going, where they should be going, when they need maintenance. If you're a consumer, then you're right. Then you're worried about, okay, if I drive across the country, where am I going to charge this thing? Are there going to be charging stations there? You're not sure. So it's a much more challenging proposition for consumers.
Are you happy you don't have to wake up at this time anymore with me?
And I loved waking up with you at this time.
Wasn't that brutal? 3, 4 o'clock in the morning. David, this is a better gig, believe me.
Yeah.
David, thank you. Good
Thanks
luck
for
with the
having
launch.
me.
Thank you, sir. Just fantastic work, as always. Bloomberg's David Weston. You can watch the premiere of the new Wall Street Week tonight at 6 p.m. Eastern Time on Bloomberg TV. Also coming up a little bit later, Anne-Marie's interview with North Carolina Governor Roy Cooper. Look out for that at 3:30 Eastern Time. Coming up on Monday, Dan Morris of BNP, Ed Yardeni of Yardeni Research, Liz Young-Thomas of SoFi, and Pooja Sriram of Barclays. It is the end of the week dominated by 25 or 50. You feeling good about that?
I'm feeling good about that. Now on to earnings. I'm glad that it's Friday. Come on, who are we kidding?
I think we all are. Have a wonderful weekend from New York City. This was Bloomberg Surveillance.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
What legacy I would love to leave is to make sure that in my village I have infrastructure. So long when I'm gone, things are still working, then I have done my job. And if some people get inspired through my work and then try to engage themselves for their community and create something that is inspiring for everyone, I will be happy.
what's the best piece of advice you would give to someone young who wants to make a difference actually in this world? In architecture or with something else?
Wow. I'm not the right one to just do that.
I think you are.
Yeah, but with the pressure you have, and then you try to be the good one, the fancy guy, the intellectual one, I have no advice than to believe in yourself and really work hard. You know, when I started, no one would have imagined that I will be able to see my name connected with Aga Khan or Pritzker or sitting at Bloomberg to talk about sustainability, about future of sales. No. Myself, 5 years ago, if you told me that, I will say no. I will never imagine. So I will encourage everyone to believe in what you're doing and not try to run after the newest of the newest. Just be consistent. Just work on things that matters for you. Really, at the long term, it pays.
About artificial intelligence. Is artificial intelligence going to enable you and others to say, we have enough information to know exactly what something is going to be worth in terms of insuring it or not?
Artificial intelligence is finding its way into our business in a variety of different factors. I think the first piece is getting much better insight into data, which allows us to make better decisions on underwriting. It's also a great opportunity to service business better in terms of like call centers and different ways of what's using robotics and other AI will be very helpful. But it is an emerging practice within the industry and one that is evolving very quickly. So it's also going to present risks that other companies, how they use it and how they use large language models and making sure the decision making is very sound. So it's complicated, but it definitely is benefiting the business today.
All right, 30 minutes away from the last trading day of the week. Welcome to Bloomberg Open Interest. I'm Matt Miller.
And I'm Shonali Bassett. Katie Greifeld is off today, and Bloomberg Open Interest starts right now.
All right, we are focused on some big stories today. FedEx cutting its outlook and disappointing with its quarterly profit. The stock is absolutely decimated in the pre-market. Plus a C-suite shakeup. Nike rallies as veteran Elliott Hill comes out of retirement to step in as CEO. And let's take a look at where markets are trading right now in terms of futures. We do have red arrows here. They're slight, 0.1% on S&P and NASDAQ futures, with the U.S. 10-year yield also not moving much. Is that fair to say? Not much. It's less than 2 basis points, but wow. Yesterday was an amazing day, and we did hit an all-time high with a 1.7% rally into the close on the S&P 500. So safe to say we're coming off a lot of enthusiasm for equity. Shonali, what are you watching?
To see the market start taking a breather here. Let's watch some stocks before the market opens here. FedEx, as Matt has been talking about, lower after warning that its business will slow in the coming year, which is a potential warning sign about the direction of the U.S. economy. We're seeing FedEx down 12.7% pre-market. Also watching home builder Lennar, disappointing as prospective homebuyers have still been hesitant to make offers, even as mortgage rates continue to drop. You have a 3.6 decline pre-market in Lennar. Nike, keeping an eye on that, of course, too. Big story of the day, 8.5% higher pre-market. Nike is replacing CEO John Donahue with its former executive Elliott Hill. We're going to talk more about that this hour, Matt.
Yeah, absolutely. And wow, Microsoft is going to reopen a reactor at 3 Mile Island to power what it expects in terms of its AI demand. So that's an awesome story as well that we'll touch on. I think the FedEx story was absolutely fascinating yesterday, at least for me, right? Being kind of an old market watcher, we think of FedEx and UPS as these bellwethers. So when they miss and when the stock gets taken down so much, Shonali, it really makes me question the U.S. economy. on a day when we had a huge rally, but a 50 basis point cut. So if the Fed needs to cut by that much, will they need to do it again? And you know, markets are pricing in even more cuts than the Fed showed on the dot plot.
And clearly, the markets have not quite made up their mind about what that 50 basis point means, the direction of the economy ahead. I want to point out that note from Bank of America's Michael Hartnett this morning, who says we're now reaching bubble territory, with the markets pricing in another 200 or more basis points worth of rate cuts through the end of next year, and 18% earnings growth in the S&P 500. He says it doesn't get better than that. He says to start hedging. He's not the only one. We're going to talk more about this now at the desk with Cameron Dawson. She is Chief Investment Officer at New Edge Wealth. I want to go back to something Matt was talking about here, about FedEx, because now you are seeing FedEx really taking a hit, perhaps dragging even more the market lower pre-market now. How much can you extrapolate that story?
I think it is tempting to extrapolate because FedEx has often been lauded as a great economic indicator, but it's important to remember that there's been a lot of idiosyncratic issues with FedEx on execution, as well as the fact that there's still a big overhang from the supply chain bullwhip effect that's still affecting their business. It's interesting, if you look back over the last 20 years, there used to be a very tight relationship between the Cass Freight Index and the S&P 500. As you moved more stuff around the economy, you saw stocks go up. Since 2022, that's completely broken down. Stocks have soared, and you've seen that Cass Freight, that trucking index, completely plunge, which just suggests that this stock market is more of a reflection of intangibles and AI and tech versus the real economy.
But at what point does the real economy start to impact here the stock market? Because if you're saying supply chain bullwhip is part of the problem here, then wouldn't that be something that you have to worry about in terms of future inflation?
I think it is a very important point because we've also seen what's the one pocket of weakness in economic data, manufacturing data, and you've still seen this impact of price pressure within even a weak PMI, which just suggests that companies are still seeing price input cost increases. However, what they're seeing is fading pricing power, and that means that they're not able to pass on higher input costs onto their customers, which is one of the reasons, as Michael Hartnett was talking about, 18% earnings growth next year. That relies on a lot of margin pressure. If you're seeing higher input costs as well as fading pricing power, it might be hard to reach those margins.
You know, I think the Hartnett note was interesting because I have this picture of investors who haven't caught up yet, just buying in at any price, right? And that makes the floor a lot further down. I mean, if we start to get a little bit of a downturn, those losses are right there for them, so they have to sell. Do we get another August 5th?
We are still in a very seasonal stretch of higher volatility, and volatility even kicks higher technically within October. So we wouldn't be surprised to see that volatility. One of the interesting dichotomies here is that if you look at individual equity positioning, it's still only 1% off of its 20-year high, which just means that individual investors are fully invested. But look at the Deutsche Bank Consolidated Positioning Report. It's down to the 54th percentile, which means that institutions have pulled back. So maybe that kind of push-pull between different cohorts of ownership can help lift the market if you need to see institutions pulled back in. But to your point, individual investors, they are fully invested.
Yesterday we spoke with Steve Eisman, who said, come on, it's all about the economy. If the economy is good, stocks are going to go up. If we're headed to a recession, they're going to go down. What do you think about the economy, especially in light of the Fed's double rate cut yesterday?
It's such a good reminder that good news is good news and bad news is bad news. Maybe over very short periods of time that gets flipped and inverted, but at the end of the day, as long as you're in an environment where you are seeing forecasts for GDP growth, forecasts for earnings growth continue to rise, that is a good environment for stocks, even if it means a tighter Fed than what the bond market is expecting, for example. So one of the things we're watching really closely is that earnings line, which is that earnings expectations for 25 are very high, and for the first time in a year, you're starting to see 25 estimates level off and tick just slightly lower. It's not enough to say earnings recession, it's just to say that expectations are high. Can we really achieve that? And the bull case would be because of Fed cuts, we could.
I will point out, Shanali, that I was talking with Gina Martin Adams yesterday, and she said a lot of that earnings revision concern is down to energy stocks alone. That sector,
and
obviously.
We're watching it very, very closely.
Yeah, of course, because they've had lower prices.
The other thing I want to ask about regarding this Hartnett note in particular is how he says to hedge. He says through bonds and gold. We talked to Amy Wu Silverman earlier this week over at RBC. She talked about the options market being a very good place to find some cover. Bonds in particular, I think this is where my questions lie, because if you saw a 50 basis point rate cut and the next day you saw the 10-year just plummet, then why would bonds be a good hedge?
Well, it's such a good reminder that the bond market has priced in almost the full extent of the Fed easing to come, and that if you don't get that easing, the bond market could be disappointed. Also remember that you have economic surprises that are turning higher. That has often been correlated with higher 10-year Treasury yields in the short term. Don't forget that we have fiscal stimulus on both sides that are being contemplated within the election as well, which just suggests to us is that bond yields got very oversold. They could bounce, but if they bounce, that's an opportunity for us to continue to move out of cash and extend duration in order to get that diversification that bonds will provide, because we do think this is different than 22. 22 was a year of rising inflation that was really bad for fixed income, which just meant that they did not diversify. If we have a recession, we think bonds get their diversification mojo back.
We have to redefine plummet, I think, because I'm all for sensationalism.
They took
but if they're up 3 basis points, I don't think that's really plummeting.
At first, it was 7.
7 whole basis points?
Okay.
Yeah.
So where do you hedge then?
We've been using the options market to hedge where investors are feeling a little bit shakier. What we're able to do is structure a hedge where you're still able to get upside in this market and really targeting that upside range that some are talking about, that 6,100. If we were to get there, you are trading at a valuation that we haven't seen since the peaks in 2020, late 20, early 2021, which means that that seems like a very fulsome place to hedge up to the upside. And then that allows us to be able to hedge downside 15% or so in the event we get a period of higher volatility.
Speaking of hedging, where do you look for safety in the stock market as well? Because if FedEx had a number that sent it far lower, not plummet, maybe, but far lower. You also have the same
FedEx
thing.
definitely is plummeting today.
Okay.
I think if you're down 14% in the stock, that's a plummet. Yeah.
UPS also plummeted when it reported earlier this summer. So at what point do you say avoid the real economy sectors in the stock market? Is there somewhere else that is defensive to be hiding?
Well, we would be cautious, at least in the very short term, of chasing these super defensives, your utilities and your staples. They've gotten very overbought, and you've seen excessive inflows into those sectors, which just suggests that you could see a breather. Of course, if you do see a pullback to trend and you still have fears about economic growth, then maybe that's an opportunity to buy. The utilities aren't necessarily expensive either versus the market, which just suggests that maybe have some patience before stepping into the hyper defensives.
Cameron, great having you on the program. Very smart analysis. I'm going to put the freight index on my dashboard now so I can watch it more closely. Cameron Dawson there of New Edge Wealth. A check on futures, not plummeting, but we are seeing increased drops. Now down 0.25% on the S&P. NASDAQ futures down about 1/3%. Let's get a look at the individual names moving ahead of the opening bell. For that, we go to Abigail Doolittle. Abby?
That one stock not contributing to the small decline for the indexes this morning. Constellation Energy surging up about 12%. This, of course, after they said that they're reopening 3 Mile Island because of demand from Microsoft for AI. Microsoft had agreed to buy their electricity to supply a growing fleet of data centers. Microsoft down ever so slightly, but because of its big weighting, the second biggest weighting to the S&P 500, the NASDAQ 100, this is a piece of why those indexes are down just a little bit. PepsiCo falling. This is Morgan Stanley has cut shares from an overweight to an equal weight off the lows, down about 0.9%. The analysts there had upgraded shares not so long ago, now downgrading, saying that there's less than 6% upside to their price target, and that there is EPS risk to earnings, the company meeting those earnings due to lingering concerns around stalling growth. And then finally, GM, Ford, and Stellantis all down. This, of course, as UAW is warning of potential strikes at Ford and Stellantis at least. So GM, a bit of a sympathy trade there. And of course, this a year after the unprecedented work stoppages last year. It'll be interesting to see if that happens again, Shanali, especially with Boeing, the Boeing strike. It seems that those auto strikes last year perhaps set the tone for the current Boeing strike.
Tough trade in the mobility sector there. Abigail, we thank you so very much for keeping an eye on it for us. Now, coming up, we're going to go to retail because Nike pulls out one of their veterans out of retirement. But can he be the one to turn things around? We're going to get into that story next. This is Bloomberg.
So a number of people, I think, from Homeland Security and or the CIA or NSA have gone to Capitol Hill and said that TikTok is a danger to our national security. But the public hasn't been given that much detailed information about what the threat is. How much of a threat to our national security is TikTok?
The People's Republic of China acts adversely to the interests of the United States in different ways. One of those ways is through the dissemination of disinformation, the intentional communication of false statements, and TikTok is an extraordinary avenue through which to disseminate disinformation to millions and millions of people.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
DOJ or other authorities
could face bigger challenges next.
Was going to keep bringing World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Let's get now to high interest to look at what's making headlines around the world. Israel carried out extensive airstrikes across southern Lebanon yesterday, stepping up hostilities against Hezbollah. Hezbollah's chief blamed Israel for explosions this week in hospitals, in pharmacies, and other civilian-populated areas after pagers and walkie-talkies exploded around the country, injuring thousands and killing dozens. The owner of the now shuttered 3 Mile Island nuclear reactor in Pennsylvania will invest $1.6 billion to bring it back online, selling 100% of that output to Microsoft. The tech giant is looking for carbon-free electricity for its data centers so it can power its AI needs. And New Yorkers, it happens every year. The United Nations General Assembly convenes in Manhattan. It's worse than SantaCon, and sets off a wave of road closures and police escorts, completely snarling traffic. This time around, it's set to be particularly bad, with trains seeing 50% more delays this summer over last. The city has declared a gridlock alert for the whole of next week.
And we're watching shares of Nike extend gains after the sneaker giant replaced CEO John Donahoe and brought in veteran executive Elliott Hill out of retirement. This is all part of an effort to return the struggling brand to its glory days. Here to tell us what the street makes of the move is Christina Fernandez. She is senior research analyst at Telsey with an outperform rating on Nike and a price target of $100. How does this change the game? You see the stock market reacting pretty significantly. You actually also see many of Nike's rivals trade lower on the heels of this announcement as well. How much faith is there in this new executive returning?
Yeah, I definitely see it as a positive for the stock. Nike is the strongest player in the sector, and Nike returning back to its roots. It's really, it's good for the company. Where Nike has strayed is really on product innovation. So they need to bring new product to market. They need to rebuild relationship with the wholesale partners, and have the product more out in the marketplace and bring back its marketing prowess. So they've strayed a little bit away from that over the past couple of years with the CEO who was really more focused on making Nike a more technological savvy company, and they lean really, very heavily into DTC. And now, they started to pull back and go back to what worked with them in the past. And I think by bringing someone who was at Nike for 30 years, knows the companies really well, knows the inside out of the industry, the employees, the partners, it gives them a good opportunity to get back to what has been successful for them over many years.
I'll never forget my first pair of Nikes. In the 4th grade, they were so cool, and everybody had to get a pair, Christina. Then we got Reeboks, and then there were British Knights. There was a brand where you, pumped them up. There was Puma. All of these things end up being a flash in the pan, right? Are Hoka and On Cloud, or whatever it's called, are they really lasting competition to a behemoth like Nike?
I mean, there are definitely competitions in pockets of the sector, right? Where they've been doing really well is on the everyday runner. But Nike, when you look at Nike, a $50 billion company, they play in pretty much every sport, and they've been, very strong in basketball. They dominate here in the U.S. They're strong in soccer, every team sport, and all the individual sports. So those brands, I see them definitely competitive in particular pockets of the sector, but there's not many companies that can compete with Nike across the universe. Adidas is probably the one that can do it best, and they're about half the size of Nike. So, there are brands today that are, like the ones you call out, and then also Adidas has been doing really well on the lifestyle shoes. So, there's definitely there's always trends in this industry. Some products do better than others in different cycles, but, Nike definitely has the advantage just given their size and scale.
Right. Tell us more about this industry. What is the moat here? Because to Matt's point, I'm one of the switchers, actually. You wear British Knights? Very Nike. I had 7 pairs at one point in every different color. I have moved to On Cloud. I'm a runner as well. My store makes me choose much more, safe shoes.
That's Federer's. It's Federer's brand, right?
So, well, that's the point here, Christina. If you have to kind of really pay for brand awareness a little bit by these, multi-million-dollar deals with athletes, for example, what is the moat to this business, and what advantage does Nike have at this point in time?
Yeah, I think the moat with Nike has been their product innovation, right? That it's unmatched given their scale. It's been their marketing prowess with the endorsements. I mean, when you look at their roster, they have, a lot of the best athletes in the world, and, having space across the marketplace, so not just their own DTC, but also having, the Foot Lockers, the Dick's, everyone else below them, the Macy's, the Kohl's, really show their product in a good light, and being able to segment the market for different customers, and doing that, time and time again. And that's, it's easier to do over a short period, but hard to do, year after year. But that's what they need to get back to, and they lost a little bit of that during the past couple of years.
I mean, I can't remember if it was Phil or Mark Parker, but I was reading one of the notes to the employees from a Nike founder who said, we've got to get back to the groundbreaking sneaker technology, which, sounds like a pretty silly phrase, but it's really to Shonali's point about the people, right? Will there ever be another Michael Jordan for the shoe industry? I mean, is it possible that he could be eclipsed? Am I just, old and, nostalgic?
Yeah, I mean, I think it's probably hard at that level, right? Like Jordan is a $5 billion brand, so it's probably hard that you're going to have one athlete that can grow a brand like that and have his legacy, but it's really about the accumulation, right, of different athletes. So they have, LeBron that has his line. They have other athletes that they're newer to the brand that they've done well, the Tatums, the Lucas, and, they're doing more in women. So I don't think they're going to have, one athlete that's going to be as dominant as Jordan was, but just, a whole range of athletes that together can drive innovation over time and, and drive sales year after year. And that's really on the performance side, the lifestyle, which is also a big part of the business. It's really more trend driven and going back to the archives of time and trying to bring new trends to the market.
Yeah, I like those 1997 Air Max for runners. Those are good. Christina, thanks so much for joining us. Christina Fernandez, Telsey Senior Research Analyst, talking to us about Nike and really the sneaker industry at large. Coming up, we'll talk about tech and Apple. It's facing an unprecedented challenge, persuading customers to buy its latest iPhones without its newest feature. Social climbers next. This is Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizon's Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now. We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space. That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
I'm David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
Done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
It's time now for Social Climbers. The company's making waves this morning. And first up, Johnson & Johnson is boosting its offer to settle thousands of lawsuits by people who say its baby powder gave them cancer. The offer was raised to over $8.2 billion, up from $6.5 billion. J&J maintains that its powders never caused cancer and that it appropriately advertised its baby powder. Next, Palantir won a $100 million contract that would let the company offer AI tools to a larger portion of U.S. military personnel. Palantir's Maven Smart System uses AI and U.S. intelligence data to create battlefields on digital screens. The U.S. military used the system to help identify targets for airstrikes in the Middle East this year. Finally, the newest Apple iPhones hit stores today. The line was out the door for the Fifth Avenue stop. It is only missing one thing, though, the AI software that the tech giant has been touting since June. Users will have to download the software features over time as they become available during the coming weeks and months. You can follow all the latest company buzz on TRAN Go on your Bloomberg terminal. This is Bloomberg.
recent years, you created an institute, the Jane Goodall Institute, and what is that designed to do?
Well, that was started in 1977 when by then I had a little research station and 4 of my students were kidnapped and everything shut down. And so some friends of mine said, well, let's start an institute so that this research can carry on. Bless them. So that was 1977, and it was set up to study, conserve chimpanzees and other animals and educate. And it's developed since then. So it's, you know, we've got 27 Jane Goodall Institutes around the world. And then I realized at some point that the African people living in and around chimpanzee habitats right across Africa were struggling to survive. There was crippling poverty, lack of health and education, moving deeper into the forest, being exposed to diseases like Ebola and HIV from the chimpanzees and vice versa. It hit me. If we don't help these people to find ways of making a living without destroying their environment, conservation won't work.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg.
All right, we are moments away from the start of trading on the last trading day of the week. This is Bloomberg Open Interest. I'm Matt Miller. After a day like yesterday, you might be tempted to just sell and take a long weekend, and it looks like maybe a lot of people have done that, right? Here is a look at futures, S&P futures and NASDAQ futures down about 1/3 of 1% after a new all-time high on the S&P yesterday. Absolutely soaring in equity. The equity trade yesterday up 1.7% after a 50 basis point rate cut by the Fed on Wednesday. Feels like you could end it early. These guys are still going to work at Innovex. They're ringing the bell on the New York Stock Exchange. Down on the NASDAQ marketplace, Voyager Acquisition Corp ringing the opening bell. But in terms of the markets, it does look like we're taking a little bit of a breather. Could be the FedEx warning and profit miss that is weighing on these indexes. You can see the cash trade now just opening up down about 1/10, 0.2%. The Russell opening down 1/3 of 1%. But we've had some good news as well. We were talking about Nike getting a new CEO, and after they paid Phil Donahoe $104 million over 5 years, they kind of need it, losing out to competition like Skechers and, what is it? On Cloud and Hoka. I can't even keep up with the sneaker fads anymore, but you can see the stock up 7.5% right now. We are also looking at HPE, Hewlett Packard Enterprises. Those shares have been on a winning streak lately, beating the S&P Tech Hardware Index. Earlier this week, Bank of America upgraded HPE to a buy from a neutral. The upgrade cited its Juniper deal. And just to clarify something we were talking about on Tuesday, when the deal was announced earlier this year, HPE did say at the time that it had already secured all the funding commitments necessary to make it happen. Shonali?
Yes, Matt. Keeping an eye also here on Lennar, the home builder dropping on an earnings miss as high mortgage rates cut into affordability for buyers, and Lennar down 3.6%. We'll talk a little more about that housing market in a second here. Also, we'll talk more about FedEx. It is lower after saying its business would slow in the year ahead. It reported a worse than expected quarterly profit. We have FedEx shares at the open down more than 13%. We're going to take a closer look now with Bloomberg's Abigail Doolittle.
And take a look at this plunge, Shonali. This really puts it into perspective, just this deep dive, down 13% for the shares of FedEx, as they did, as Shonali just mentioned and has been mentioned all morning, cut the full year outlook. What's worrisome about this is it a signal, a negative signal for the economy, especially after the Federal Reserve just cut by 50 basis points. One of the only times they've done that in a non-emergency time. Is the Fed seeing something that they didn't talk about that brought that cut that would be supported by the idea that this giant shipper has cut the outlook. The CEO, in fact, saying that it was a challenging quarter, and then going into the outlook. So they basically, the EPS miss was massive. They put up $3.60 versus the estimate of $4.77, a big revenue miss as well. They lowered the full year view on both the top and the bottom line, and then they're also seeing some cost reductions. This could be a positive, but it's not filtering through to the numbers yet. In terms of the revenue growth that we're seeing, it's not dramatic when you take a look at it from this version. In fact, you could say that numbers had been moving in the right direction, but I think what folks really don't like here, Matt, beyond the fact that the outlook was reduced, is now we're moving back in the wrong direction again, even though it's not so dramatic. But I think that the bigger piece of the story here is it some sort of warning here on the economy?
Yeah, absolutely. That's always the worry when you get a FedEx or a UPS warning or missing on profit. Abigail, thanks very much for that. Abigail Doolittle there talking us through what's going on with the FedEx release yesterday and the kind of cratering that we see in the stock today. Let's talk, though, about the record we hit yesterday after the Fed's 50 basis point cut. With us at the desk is Ironside Macroeconomics Director of Research, Barry Knapp. Barry, great to have you here. Shanali and I spent a lot of time talking about how September is the worst month of the year for stocks. And we did have the worst start to a month since like the 50s, and yet here we are at an all-time record high in the S&P. Is it warranted?
No, I don't think so. We've got, three major concerns to deal with: the economy, earnings, and the election. And the range of outcomes are all skewed quite negatively. Obviously, the FOMC recognized that, which is why they went 50 instead of 25. Had been our call, primarily because the range of risks around the SOM rule and the labor market, I've been describing it as negative convexity. That's sort of an old derivative, saying, but the idea was, it's basically what Bill Dudley's been saying, which is the real lesson of the SOM rule is once the unemployment rate goes up 50 basis points, the 3-month average of it, it's never stopped at just up 50. So that even the Fed's forecast this week of it going to 4.4 and suddenly just stalling out there because they stick the landing is a fairly low probability outcome. And fortunately, the Fed
another 50 basis point call in November.
I agree.
You agree?
I do. I think we're going to get 2 weak employment reports that mark revision, and you assume that that pattern's continued since March, which is a pretty good assumption. It may even be a conservative assumption because demand for large corporate employment has weakened as well. So small business employment could be even weaker. Employment growth is now down to 80 basis points annualized. The last 3 times that happened, in 90, we were already in a recession. In 01, it was the month the recession started, and in 07, we were 4 months away. So again, I've been arguing for some time that the way the Fed went about the tightening cycle was all wrong. They eased primarily through their balance sheet, and when they tightened primarily through rate policy and only passively unwound their balance sheet. That caused the deepest yield curve inversion since Volcker.
Are you saying that they should be tightening more through balance sheet reduction?
100% they should have tightened more through balance sheet reduction. Now, there's a couple things they could have done. They could have sold mortgages outright at the beginning of the process. Jamie Dimon alone probably would have taken $250 billion or something. They needed the assets at the time. But what they should be doing, could have done, and should be doing to this day, is instead of reinvesting into longer-term securities, any treasury that matures, they should be putting in treasury bills. The Fed had a bills-only policy from 1951 to 2008. They should not be influencing those longer-term rates. So if you're a large non-financial corporate who borrows at the curve, you're benefiting from the Fed owning better than 20% of the mortgage, TIPS, agency MBS market. That's also suppressing credit spreads. So you're able to borrow attractively at rates that the Kansas City Fed estimates they're at least 1% lower than they would be otherwise. But if you're a floating rate borrower, you go to a small bank, you are a small bank, you're a small developer, your conditions have tightened decidedly.
I want to talk about the spillover effect there that has into sectors, because you would have expected perhaps the banks to rally more on the heels of that decision, but a lot of people still concerned. Also to see real estate lower today after that Lennar report is fascinating. Barry, there are a lot of people who think that if rates are lower, then mortgage rates are also lower, and there will be fresh demand that will put housing prices higher. But there's another camp who believes that that reset could push prices lower, actually. Right. Where do you stand?
Yeah, it's a complex discussion. It does relate directly to my criticisms of how the Fed tightened because, my old colleague Steve Kim, now at Evercore ISI, Steve maintains that 70% of the supply of single-family homes comes from small mom-and-pop builders. Conditions are exceedingly tight for them. They have to go to, Alpine Bank in Avon, Colorado to get their financing. The rate's gone up considerably. But if you're Lennar or D.R. Horton, you can sell longer-term duration debt at a tight credit spread, do a mortgage buy-down, and so they benefited. So people would look at the builders and go, the housing market's fine. It's not so clear it's really fine. And the question that you raise, will it increase supply as they cut rates? It will increase supply, the new home supply, if conditions loosen for those small mom and pop builders. But 50 basis points isn't going to do it, right? You're going to have to cut at least to 4, in my opinion, to ease the pressure on small banks. And then you have the question of whether you'll get existing home sales supply, whether people will be willing to move. And if you look at the Fed's balance sheet as an example, sort of a microcosm of what the household sector looks like, there's been very little change in their monthly runoff, even though mortgage rates have gone from 8 down to below 6. So I'm not so sure that people are going to necessarily be willing to move and loosen up the market, increase supply,
Barry,
without a big move in rates.
Stick with us. We're going to talk more about these spillover effects from the Fed's rate decision. But first, coming up, a bullish PepsiCo analyst goes sour on the stock. He says his call was wrong. We're going to give you details of that today in today's top calls. This is Bloomberg.
Names in tech are on Bloomberg.
A large number of countries are subsidizing their regional data centers so that they could become able to build out their AI infrastructure. They recognize that their country's knowledge, their country's data, digital data, is also their natural resource. Not just the land they're sitting on, not just the air above them, but they realize now that their digital knowledge is part of their natural and national resource. And they ought to harvest that and process that and transform it into their national digital intelligence. And so this is what we call sovereign AI. You could imagine almost every single country in the world will eventually recognize this and build out their AI infrastructure.
Nobody covers technology like Bloomberg. Context changes everything.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
There is this real momentum from Wall Street?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Time now for our top calls, some of the analysts' action and focus this morning. First up, B. Riley Securities is initiating coverage of Snap. With a neutral rating, the firm says the stock is trading at a premium to its peers with a full valuation. The analyst also highlighting that advertising will likely be an overhang on Snap's growth, so it's a hold. Next up, Morgan Stanley says PepsiCo is no longer a buy, cutting its recommendation on the beverage giant to equal weight. The analyst citing growth risk thanks to softening demand. Morgan Stanley only upgrading the stock to a buy in March, highlighting a good entry point, but the analyst now says that fundamental call was wrong, so it's a hold. And finally, RBC Capital Markets is initiating CyberArk software with a buy recommendation. The analyst says the security software company is in a good position to increase its profitable growth. There's an exciting one there, Shonali.
That sure is an exciting one. We're also exciting. We are back at the table with Ironside's macroeconomics director of research, Barry Knapp. You know, one of the things we were kind of talking about earlier was this idea of any worries about inflation that still hangs under the surface. Do housing prices move? Do supply chains clog things up once again, that companies are still facing higher prices anyways? What do you think? How is the Fed going to cut, and cut as much as the market expects, almost 200 basis points through the end of next year?
If they aggressively get to 4%, reopen the small bank credit channel, stabilize the small business sector, which, again, I described as in recession, I think the terminal rate is likely to be 4, not 2.80, 2 3/4. And I think we are in a higher inflation environment. I've thought that since even before the pandemic. The 20 years of global goods disinflation that we received as a consequence of integrating China and the Soviet bloc into supply chains will likely dissipate through the course of the decade. Right now, that impulse is really intense, right? I mean, we're getting negative 1 3/4% goods prices as China tries to export their way out of house prices falling 1% per month. But I don't expect that to persist. And in my view, again, the Fed, the way they conducted policy, they did permanent damage to the supply side of the housing market. And so to get rates to a level that would loosen the market and allow construction to pick up and the market turnover velocity to increase, I think is improbable. So I don't see housing-related inflation going back to 3. And then the final piece of this is we're running 7% budget deficits, government spending at 24% of GDP. The only time we've ever done that is during recessions. And you see that manifesting itself in government wage growth 100 basis points faster than the private sector. Government employment growth at 2.25 when the private sector is more like 80 basis points. So we've got these couple of big inflationary impulses that, like, maybe policy all change next year and we'll get someone in the White House that cuts spending back to 20%
this is
GDP.
well, that's unlikely.
You know,
that's unlikely. No one's cutting spending. No one's cutting spending, but you could see some pretty inflationary policy enacted if someone new gets in the White House. What do you think about the election, especially given, I mean, you have had an incredible career at Lehman, at Barclays, at BlackRock, at Guggenheim, but you also see a lot of the country that some of us don't, right? I mean, you live out in the middle of it and you fly around all the time.
Pretty cool now, completely different perspective.
It's great, you know? But given that perspective, and, you know, a generation of people that can't afford to buy a home and a small business recession, what do you think about the election in November?
Well, the first thing I'd say from a risk perspective, if you think about 2016, probably the lowest probability outcome was Trump winning with a red wave. But the implications of that were super positive for the equity market. It meant a corporate tax rate cut, and we were the second highest in OECD. Ultimately, we got that outcome. We got that boost to earnings. We had a level shift in earnings growth. Now, it's still a low probability outcome right now, the blue wave, but the implications of that are almost the antithesis. So if you think about the tail risks, they're skewed quite negatively, and it's hard to argue that stock prices are reflecting that. So
something that's resonating in my mind is, how do you keep spending at this rate? Like you said, we're spending as a country like we are in a recession, and have a terminal rate of 4%. That is costly.
Yeah,
Sure, they got to get real rates negative in order to deal with this debt, right?
Correct. So I am sympathetic to the argument that when you think about debt to GDP, GDP is a flow variable, debt's a stock variable. We should be thinking about it relative to our total net worth. So there's your OID deficit, Steve Eisman stuff, right? Yeah. We won't have a debt crisis. But the first order effect of running spending at 24% is inflation. And so receipts have always averaged around 18% of GDP. The highest we ever got to was 20 during the 2000 stock market boom. We can't tax our way out of this. We have to cut spending or completely change the tax code, have a VAT tax or something, and that's not happening. So spending has got to come down. And I haven't heard a proposal from either candidate that gets spending back to 20% of GDP. So you have to just assume that core impulse, like the 60s and 70s, I mean, healthcare inflation.
Well, you need the bond market vigilantes.
That's right. Healthcare inflation went from 2.5% in 1965. We passed Medicare, Medicaid. It went to 7.5%.
Here's the thing.
Everybody paid for it.
If you are spending more on borrowing costs here than many parts of our budget, then spending more must crowd something else out. So by definition.
And we're spending more on borrowing costs than we are on the national defense.
Right.
I mean, on anything else.
Exactly.
Right? Yeah.
So, I mean, all these things add up to inflation over time. Again, because of that negative impulse from China, I think the Fed is right to focus on the employment part of the mandate, because I do think the risks in the labor market are really intense right now. We're at negative convexity. The unemployment rate could go up rapidly from this point. And that Chinese deflationary impulse is likely to persist for at least 6 months. We'll see if they ever decide they want to change their structure and try and spur consumption. But when we get into 2025, the demand for capital to build out Larry Ellison's data center farms and all this stuff, maybe greater mortgage demand, and the fact that the Treasury's been crowding all the financing into the front end, all this stuff's going to add up to higher rates and higher inflation. And I think we are in a structural bond bear market like we were in the 50s, 60s, and 70s.
That's a call. All right, unfortunately we are out of time. Next time we're going to book you for an hour, dude. Next time we're just going to make you guest co-host for the show. Yes,
yeah, absolutely.
Because it's great spending time with you. Yeah. Thank you so much for coming on the program. Ironside's macroeconomics director of research, Barry Knapp. Coming up, Apollo gets a $5 billion boost from BNP to expand its private credit reach. That and more on our Wall Street beat. Before we go to break, let's take a look at Constellation Energy, hitting a record high on the Microsoft deal, opening up the nuclear reactor again at 3 Mile Island. This is Bloomberg.
up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
As we spend some time here on the broader presidential race.
Let's
focus in on European politics.
Makes you wonder how politics might play out.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Time now for the Wall Street beat. Apollo cinched $5 billion from BNP Paribas as it looks to grow its credit business for the long run. Bloomberg's Allison McNeely reported on this, joins us now. On one hand, if you're Apollo and you have a credit business that's more than $500 billion, what's another $5 billion to you?
I mean, it's really about another $5 billion to do $5 billion more worth of deals. We've been reporting over the past year about how Apollo has been trying to bring in more forms of financing for its credit business, in particular Atlas SP, which folks may know as the Credit Suisse Structured Product Group, the entity known as, or formerly known as. They got some minority equity from MassMutual, from an affiliate of Adia, and now they're bringing in a big European bank.
This Atlas unit has been pretty impressive in that it really struck deals immediately. You thought about them kind of diving into that regional banking crisis early on after that Credit Suisse deal. So how big will this really be to Apollo? How is it changing? Because they've been forming new leadership there, haven't they?
Yes, it's part of a shift to try and increase the amount of debt that they can originate and the number of deals that they can do, and really just kind of, I think, showing Wall Street that they have partners all over the place and sort of a show of confidence for the business.
I think it's also important to differentiate here, and there's a quote here from Jim Zelter, Apollo's co-president, saying this is one of the, if not the largest ever, long-term private credit financings. Apollo kind of has been really marketing this differently lately. Investment grade, safe stuff. Why is that so important right now? Because we are seeing so many more headlines of private credit stress and defaults.
Totally. I mean, this is probably the biggest issue that Apollo contends with in all areas of their credit business. How safe is private credit really? What is private credit? What is in private credit? Because for a long time we've thought about it as being higher yield, riskier, stuff that couldn't get financed by the banks. And so they are going to great lengths to explain, no, we're actually just an alternative to the banks. Our product is safe. Our lending is safe. It is an investment grade.
We will not lend to those below a certain credit rating. Allison, we thank you so very much for your time. That is Bloomberg's Allison McNeely, all over one of the bigger scoops of the day. Let's take a look at markets before we head to break here, because we are looking at erasing some of those gains from yesterday. That brought us, Matt, to record highs. You now see the S&P 500 about 1/4% lower.
Yeah, but still at 5,700, right? So we're
almost.
Still almost. We're still at a very high altitude and not seeing big drops. I get the feeling that a lot of people, there was such a build-up to Wednesday, and then you got the big cut, and then yesterday we had this huge rally. Why not get neutral and go to the Hamptons? Like, it makes a lot of sense.
Or maybe you're a little worried because you have small caps trading 0.8% lower. It's like Barry Knapp says, we're trying to avoid a small business recession, he believes.
Yeah, well, a lot of talk about the rolling recession. Coming up the next hour, Emily Rowland on the Fed, shifting its focus more to the employment mandate. This is Bloomberg.
Liquidity is the lifeblood of an airline. We make very conservative decision-making about when we raise funding and how we raise funding. We try to diversify our sources, and we're always very focused on the actual rates. And we like to build in flexibility in these financing structures so that we have an opportunity to prepay debt when appropriate, so that we can continue to optimize the overarching rates that we're paying.
What have you learned with the dynamic move of the interest rates that we've seen from Chairman Powell? I mean, do you go fixed structure or floating structure, much more like what they do in Europe?
Yes and yes. We have a mix currently. It's a little bit of a different model than what I was used to in the public company space. Say in some ways we provide ourselves with a natural hedge, leaving some of our debt floating and some fixed.
You have to have the short-term discipline to sort of circle the wagons around cash. I mean, cash is oxygen. I know where every ounce of cash is going, but we also have to be nimble around that as well because things change by the day. I know the folks who aren't willing to invest right now may have large pockets of investment in the future. So I want to be in front of them. They may not be a buyer at this point, but I do want to spend a lot of time in front of that other set that is a buyer at this point. They're interested. They want to be an early adopter of the stock. They're interested in the story.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, good Friday morning from the Bloomberg Interactive Brokers Studio in New York City to our worldwide audience. We're streaming live on YouTube as well, youtube.com, and that's where you search Bloomberg Podcast, and that's where you'll find us. Alex Steele, she's gone over to TV because she is a star. John Tucker's sitting in for Alex. John, we got you for the next 2 hours, my friend.
Sorry about that.
It's all right. I thought we were having
really
Molly
had no
Smith from
choice.
Bloomberg News, and I had a whole host of tennis questions to ask her, but we'll have to save that for another day. We got a lot happening here. A little bit of red on the screen after that big move higher yesterday in the markets. We've got the S&P off about 0.4 of 1%. We'll get to that. We want to talk FedEx earnings. We're going to do that with Thomas Black from Bloomberg Opinion. Daniel Flatley, Bloomberg News national security reporter, gives an update on Israel and Hezbollah. There's been some activity over there. Sarah Ponzek, financial advisor at UBS Private Wealth Management. She's going to join us from South Florida to talk to us about what's happening in those markets. What's UBS saying post-rate cuts? So we got a lot coming up in the next hour. Let's kick it off with Lisa Mateo. She is not abandoning me. Lisa, what do you got for us?
I'm sticking with you. You're stuck with me. All right, so that high from the Fed's 50-point rate cut this week seems to be losing its steam a little bit. Some bad news on earnings may be to blame for that. You have FedEx, an economic bellwether, missed profit estimates, warned that its business would slow. Their shares down about 14%. Even if you look at shares rival UPS, down nearly 4% right now. And then you have home builder Lennar. Their shares down more than 4%. After quarterly home orders fell short of expectations, but Nora Melinda, she's going to break all that down in more detail in just a bit. Let's get to NASDAQ futures, down 0.3% or 55 points at 17,956. The Dow down 0.2%, 97 points, 41,924. And the S&P 500 down 0.3%, 20 points at 5,693. The 2-year yield 3.63%. 3.4%. That's up 4 basis points. And the yield on the 10-year, 3.75%. And that's up 3 basis points. To currencies, Japanese yen down about 1% after the Bank of Japan leaves rates on hold. It's now at 144.21 against the dollar. The euro, British pound weaker. We have Bitcoin, little change right now, down about 0.2% at around 62,000. Today, also the big day, Apple's new iPhone 16 lineup hits stores, almost 60 countries, and that will be without the AI software. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash. Paul and John.
All right, Lisa Mateo, thank you so much. We appreciate that. John Tucker sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube, so you can check us out there, youtube.com, search Bloomberg Podcast. Market Drivers today is brought to you by IBKR Financial Advisors. Switch to Interactive Brokers for lowest cost global trading and turnkey custody solutions. No ticket charges and no conflicts of your interest at ibkr.com/RIA. We have red on the screen here today, as Lisa was just mentioning, S&P off about 0.3%. Let's go under the hood, see where things are happening in the markets. We do that with Norma Linda. She covers all the equity markets for Bloomberg News. Nora, what are you looking at?
Well, we have to dig into FedEx. I mean, this is the biggest decliner in the S&P 500 right now. We've been talking about it all morning after they reported earnings post-market yesterday. But we're seeing shares of FedEx lower, and this is all based on its forecast for the future. It's saying that it's seeing warning signs. This is really warning signs that investors are seeing for the economy, because that's not what you want to hear at all from FedEx. It said that essentially it was hurt by a pullback on priority services, and essentially customers are running toward cheaper options over FedEx. And this has really been a challenging quarter for the CEO, and not what you want to hear at all when we're looking at the future.
I had one piece of trivia that I didn't know about because I was reporting on it earlier. Their biggest customer, the United States Postal Service.
I forgot about that. Yeah. I remember people.
But I mean, that contract is ending. It's not that it's not a big generator for them in terms of profit.
I don't compare prices when I go to ship something. Like in my town, it's in a strip mall, and they're separated by like 4 or 5 stores, UPS and FedEx, and it's wherever I get the parking spot. Do people?
See,
I would say you're in a different economic strata.
I don't think so.
Is
there a pricing difference between UPS and
I mean, in
FedEx?
Roanoke, Virginia, when I was there, I would think of FedEx as the more luxury option. When I'm like, okay, I want this to get there quickly and nicely packaged, I'll go there. USPS is where I would go otherwise.
Okay, all right. Well, let's see. How about Nike? I'm a Nike person.
Are you? Do you shop there?
Yeah, I'm a Nike.
Is Nike a sneaker or a fashion brand?
I mean, I don't think anyone knows at this point. I mean, I think their Panda Dunks, that was one of their bigger shoes that were coming out. Everyone's been wearing them, and now when too many people wear them, no one wants them anymore. It's no longer trendy. But I know that that's really been a sticking point here for the company. But we are watching Nike. It's really in focus, especially after its veteran Elliott Hill replaced the CEO, John Donahoe. He's going to be retiring, and of course, this is really a shakeup in the market as people are really looking to see what this transition plan will look like at Nike. And apparently, this appointment of Hill does not necessarily come as a surprise, according to Morgan Stanley, but they are saying it's a positive for the company.
And I got to know what amounts to innovation in the sneaker world for Nike.
What amounts to innovation? What's the next step you're saying?
Yeah, it's just like they're talking about technology and like, it's a sneaker, people.
They're maybe trying to diversify.
It's a brand. I mean, the stock's down 20% year to date, even including today's 6% increase. But this company's got a market cap of $128 billion. It's extraordinary. But I mean, boy, if I left the company and the stock was up 6%, I wouldn't be feeling too good.
I'd be a little sad. A little sad on this Friday. Yeah. But I did want to quickly look at home builders. We can't leave those alone. I'm looking at Lennar, that's ticker LEN, and this company's in focus because it reported earnings yesterday, and essentially coming out of the report, they saw orders that missed expectations, and then also looking forward, when looking at fourth quarter guidance, it doesn't seem to be meeting what Wall Street, the most optimistic of Wall Street analysts are looking for. We had Barclays analyst Matthew Booley saying that although the fourth quarter orders were guided below expectations, it does not come with offsetting gross margin strength. So definitely something to keep in mind here.
I mean, I'm looking at the trailing 12-month performance for some of these home building stocks, up 50%, 80%, 90%, 60%. I mean, these home
feels like you can't beat them.
Have just ripped, man.
It's
and
been
that's
insane.
because I don't know when interest rates get to the level where someone who owns a home would think about buying a new home, switching, moving, and not be too concerned about their mortgage,
And that's the thing. When does that really
I don't know what that is. We're about 6% on the mortgages, close to 6%. That's where I got mine from the Jersey
3
Shore
1/4.
compound. 3 1/4 for, so Tucker's never leaving. Alex Steele's never leaving. She's at 2 3/4.
Must be nice.
I don't know if you get down to a 5% handle, would that be enough to get people to start moving? 4%, I don't know what that number is. But in the meantime, the only homes you can get are newly built homes, and that's where the home builders are doing so well.
Definitely.
All right, Norma Linda, thank you so much. We appreciate that. Norma Linda, she covers all the equity markets for Bloomberg News. Let's get back to that FedEx story. It's just, when you think about FedEx, it's one of those names, John, you think about, it kind of goes to the consumer, to the economy. Are people buying stuff, selling stuff? Is stuff being delivered? And it doesn't look good there for FedEx. I mean, the stock's down 14, 15% here. Let's break it down, John. We'll do that with Thomas Black. He's a Bloomberg opinion columnist who covers logistics, manufacturing, and aerospace. Thomas, was the quarter as bad as the stock market is reflecting today?
Yes, it was pretty bad. There was a lot of weakness on demand. Their cost cutting also didn't keep pace. So you kind of had those two pincers there. It was a big miss. It was more than $1 miss.
Well, it's my job to ask the obvious questions. Is this stock, is it a bellwether? Does the performance here reflect the economy, or is it specific to the company?
It does reflect some consumer demand. That's you hit that right. So there's weakness out there. It's across the freight market, though. They do have a freight unit where they move freight for industrial companies and so forth. That was weak as well. So the whole freight market is weak, and that includes packages.
So Bloomberg News reporting the parcel giant was hurt by a pullback on priority services as customers traded down to cheaper shipping options. What's a cheaper shipping option? Is that just the old, just going to the U.S. Post Office?
No, it's just slower mode of transportation. So you can do priority, which gets put on one of FedEx's purple tail aircraft, as they call it. And that's the most expensive, and that can get you overnight or even by 10 in the morning or so forth. Or you can send it deferred, which is a couple of days, or you can send it by ground, which could be 5 days. So people are trending down to those slower modes to save money.
I mentioned that piece of trivia with Nora. Their biggest customer is the United States Postal Service, right?
Well, that's going to change. I think you hit on that earlier. They had a Postal Service contract in which they would fly the priority mail for the Postal Service, and the Postal Service put out a bid on that contract because it was coming due and had to be renewed, and UPS won that. So that changeover is happening now. It's going to take place in October, and that's a $500 million headwind for FedEx. So more pain in what is FedEx's second quarter. That what was reported is FedEx's fiscal first quarter, and they've signaled that there's going to be other weakness as well too. You got to keep in mind things like Cyber Week, which is that Monday after Thanksgiving when a lot of people pile online and buy things. That's going to fall into December this year. It fell into November last year. And that's a big, that whole week is big on package delivery. So that's going to be also pushed into their third quarter. So the second quarter could be pretty weak as well.
So on the cost-cutting side, what can they do to try to offset some of the weakness on the top line?
Well, they have a massive cost-cutting program going on. It's about $4 billion. It's up to $6 billion if you count their network consolidation that they're doing. They expect to get $2.2 billion of cost savings this year, but they're behind the curve. They already started off a little weaker than expected, about $100 million weaker than expected in this quarter, and it's going to have to ramp up quicker. So it's kind of a back half of the year story. You got to remember that their year ends in May, right? So that third and fourth quarter, they're going to have to really show some good cost cutting. And also there's going to have to be a rebound in demand and pricing for them to make their target, which they brought down a little bit, but perhaps they should have brought it down a little bit more. But I think they were trying to send a signal to the market that we're still good. We're going to make this up in the second half of the year. So be patient.
Right.
Obviously, the market wasn't very patient.
Wow. Yeah, I'm looking at the stock. Stock's off 15% today. Looking at United Parcel Service, that's down 4% today. DHL, again, another competitor, down 3.6%. So some weakness across the space there. Thomas Black, thank you so much for joining us. Thomas Black is a columnist who covers logistics, manufacturing, aerospace, all that stuff for Bloomberg Opinion. He's down in the Big D, Dallas, Texas, joining us via Zoom. All right, let's transition to some geopolitical news because the situation in the Middle East continues to be fluid, to say the least. We have to get our daily update, I think, or maybe hourly update. Daniel Flatley joins us, Bloomberg News national security reporter. Daniel, thanks so much for joining us here. It seems like there is more activity on the part of Israel towards Hezbollah in Lebanon. What's the latest?
Yeah, that's right. I mean, there's been some an exchange of strikes, both on the part of Israel and some retaliation by Hezbollah in that northern area recently. Of course, that follows on these attacks, these really extraordinary pager explosions and some walkie-talkie explosions earlier this week. So it's obvious that Israel is now really focusing to that northern border with Lebanon. And there is some concern, obviously, from folks in the administration that this could escalate out of control. But this is kind of the state of the play at the moment.
Am I right to assume that exchange of fire is not all that unusual between Hezbollah and Israel?
Yeah, I think that's right. I mean, this is certainly nothing that we haven't seen before. I think the worry is that given everything else that's going on, just to go back for a second, a month ago, what we were hearing from the U.S. administration, the Biden administration, was we need to get a ceasefire in Gaza, and that is key to basically tamping down tensions across the Middle East, not just with regard to Israel and Gaza, but Israel and Lebanon, Israel and Iran, what's going on in the Red Sea. And that was really what was viewed as the key piece of the puzzle. That hasn't happened, despite some recent travel by officials in the region. And so this is really kind of, going in the opposite direction in some ways. And so without that ceasefire in place in Gaza, you're sort of opening up or doubling down on another front to the north. And I think that has some folks nervous, certainly. But you're right. I mean, this is not anything that's completely new. What is new is sort of some of the activity that we saw earlier in the week with those mobile devices.
How closely is Hamas and Hezbollah aligned? And does that make that much of a difference? I mean, usually I associate Hezbollah as being much more organized than Hamas, and Hezbollah being in the north, Hamas kind of in the south, Gaza.
Yeah, that's right. I mean, they are connected in the sense that they both receive support, both in terms of funding and in terms of equipment and other supplies from Iran, which is really the primary sort of sponsor of this type of activity in the region. But they have different aims to a certain extent, but they have a common enemy, Hamas and Hezbollah in Israel. And they certainly have a shared aim in terms of continuing to sort of attack Israel and that to that end.
Yep.
So, but you're right. Hezbollah is much more sophisticated, has been around longer, and is viewed as sort of the quote unquote A team by lots of folks who study the region.
Dan, I guess we see this escalation there in Lebanon. Does that mean any kind of peace talks or hostage return talks? Are they off the table right now?
I think for the moment, you're not going to see much progress on any of that, at least not publicly. This is reminiscent of, again, going back just a little bit, a month or so ago, maybe 6 weeks, when Ismail Haniyeh was killed in Tehran by an explosion that was linked to Israel. That sort of puts things on hold for a little bit. Then there's some resumption of diplomacy, and then something else happens. I think from the Israeli perspective, they would tell you that they're facing a variety of threats on a variety of different fronts. They may be seeing intelligence that leads them to believe, okay, we need to strike here, or we need to strike there. We need to reshift our focus in this way or that way. that is somewhat divorced from the overall more diplomatic efforts. And of course, there is this larger deal with Israel-Saudi normalization that seems to be, kind of on hold right now. The Saudis came out earlier this week and said, the Palestinian state issue needs to be resolved first. So, very complicated picture, but anytime you have kinetic action, violence in this nature, it's going to put those peace deals on hold for the indefinite future.
All right, we'll keep an eye on that. Dan Flatley, thank you so much for your reporting. Dan Flatley, he's a national security reporter for Bloomberg News. He's also a former U.S. Marine, so we thank him certainly for his service.
Did you know
there.
it's a POWMIA Recognition Day?
Is it?
Third Friday of every September.
All right, very good for bringing that. I appreciate that, John. Just getting the latest on Israel, and as Dan was reporting here, we got some, some activity between Israel and Hezbollah up in Lebanon, kind of taking the focus away a little bit from Gaza, but boy, just a lot going on there. So fortunately, Bloomberg has a bureau and lots of smart reporters based in Tel Aviv, based in Washington, D.C., and we get some excellent reporting from our good friends at Bloomberg News. S&P 500 off 22 points. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Stocks pretty much taking a breather after a strong day Thursday trading following the Fed's half-point rate cut this week. The S&P 500, fresh off its 39th record high of 2024, now down about 0.3%, 18 points. We have the Dow, little change, down about 34 points. The NASDAQ down 0.4%, or 79 points. Want to dig a little bit deeper? We'll use the IMAP function on the terminal of the 11 major industry groups. The biggest drag coming from, let's see, energy. We click through energy again, energy equipment and services, oil and gas equipment and services, and at the top right now, we do have Schlumberger. They're down about 1% right now. Europe stocks.
I love Schlumbergers with cheese.
That's the hardest one to say, I tell you. Let's go to Europe Stock 600. Slipping, that is down about more than 1%. Mercedes-Benz Group, they cut a financial forecast for the full year. Right now, the Mercedes-Benz in Germany down about 2%. Then we have shares of Nike. Let's flip to the other side, up 5%. Bought back Elliott Hill to replace John Donahoe as CEO. And then shares of rival Adidas, they're down 2%. And Puma is down about 7%. Want to end with yields. The 2-year yield 3.64%, up 5 basis points. A yield on the 10-year 3.75%. That's up 3 basis points. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash. Paul and John.
All right, Lisa Mateo, thank you so much. We appreciate that. John Tucker, sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. So head over to youtube.com, search Bloomberg Live Radio. That's what works for me. I can find it that way. All right, what do you do here? The Fed cuts rates. You're a financial advisor. What do you do with your clients? What do you tell your clients in a world where finally rates are coming down? Let's check in with somebody who does that stuff for a living. Sarah Ponczek, financial advisor for UBS Private Wealth Management. Full disclosure, I am a client of UBS Private Wealth Management here in New York. They take care of me. She's down in Boca Raton, Florida. That's not a bad place to be. Sarah, thanks so much for joining us here. All right, the Fed cuts rates. What kind of phone calls were you fielding from your clients after that news, which was, for some people, a surprise?
Yeah, it's great to be with you, Paul and John. It didn't really come as a surprise, I would say. We've all been talking about this since last year, it feels, but finally the first rate cut since 2020, and the Fed came out swinging with a 50 basis point rate cut. So the conversations that we've been having with clients, even though it should not have come as a surprise, we've been talking all year long about locking in interest rates, extending out duration, slowly moving out of high yield savings accounts and money markets with cash that you do have. It's been difficult for some people to do that. So finally this week, now that we actually saw the 50 basis point cut, the question is, okay, am I too late? If I still have a lot of money in cash, what do I do with that cash? So those are the conversations, the types of conversations that we've been having this week, Paul.
So, Sarah, what do I do with my cash, Sarah?
Great question, John. So, what's interesting is, yes, we're continually and repeatedly saying, all right, if you haven't already locked in yields through fixed income and extended duration, now's the time to do so. And what's interesting is sometimes we do get pushback. There's this gap or this misunderstanding where someone might say, well, why would I lock in, a 3, a 5, a 10-year bond that's yielding 4 or 5% when my money market is still yielding, 4.8 or 5%. There's this trade-off that some people feel as though they're making in the short term. And what you really need to be aware of is the fact that, yes, your money market might still be paying you, close to 5% today. But if you look at the expectations of where, short-term interest rates are going to be a year from now, at the end of 2025, we're looking at short-term yields being close to 3% most likely. So if you can lock in a 4% treasury bill, years out into the future, yeah, you might have a trade-off for the next couple of months, but you're going to set yourself up for success over a longer period of time, which is really the name of the game. So that's on the fixed income side. Extending out duration, we're talking about, maybe 3 to 7 years in maturity, looking at that intermediate duration in the curve, and also staying up in quality. So looking at treasuries, also looking at investment grade corporates. Now, on the equity side, we still believe that the risk reward for equities is pretty strong here. And yes, we've seen a 20% return in the S&P 500 this year. Stocks are trading at records. That's great. But we're seeing this broadening out. You know, if you look at an equal weighted version of the S&P 500, it also traded at a record high yesterday. If you look at the sector breakdown of the S&P 500, all but 2 sectors are trading at 52-week highs. So we've seen this broadening in the stock market, and that's really encouraging as an investor.
Sarah, ETFs, how do you position them for your clients? How much incoming calls do you get from your clients about ETFs?
Great question, Paul. You know, obviously we can talk about investing and where to invest, but then there's a question of structure and how you invest. You know, what products do you use to invest your money? So I would say, you know, we do use ETFs in portfolios, but we use them in more so in a supplementary way. When we think about the core portion of our clients' equity portfolios, a lot of what we do is actually what's called direct indexing, which we would describe as being a step above ETFs. It's like as an investor, you have your own index that's catered to you. And why is that important? You know, there's a couple of things that you can do with the direct index that you cannot do with an ETF. You know, when you have an ETF, let's say an S&P 500 ETF, that's one line item in your portfolio. So if the market's up, your ETF's up in value, there's not much tax planning you can do there. You really can't do tax loss harvesting, which, especially as we're getting towards the end of the year, this is the time of year that we're going to start seeing tax planning really come to the forefront of portfolios. So within a direct index, you actually own a couple hundred positions within the portfolio. We all know that even in a year in which the broader stock market is up, there's a lot of individual stocks that trade at losses and pretty hefty losses throughout the year. So what that allows you to do is continue to get market performance in your portfolio, but do plenty of tax planning on the bottom side. And really what a lot of research has shown is that can add, you know, an extra 2% of performance per year on an after-tax basis. So usually for US large cap stocks, we're pretty big believers in passive indexing there. We'll use direct indexing, and then we'll use ETFs to supplement that. So that's where we, you know, right now, for example, small caps might perform pretty well with the expectation of interest rates coming down. So adding to small caps, adding to size exposure there, diversifying internationally there, maybe adding a little bit of international exposure, and then also playing industries and sector tilts. You know, we've had some exposure to some ETFs that really more so focus on artificial intelligence and cybersecurity this year, for example. So using ETFs as a supplementary play to, say, your large cap core indexed portfolio.
Okay, so if with risk assets, Sarah, it's as easy as just finding stocks that do well in a lower rate environment, i.e. tech?
So yes, look, I think there's a couple of reasons that we're still very
I'm not saying your job isn't
tech.
hard, Sarah.
It's very, I would say it's pretty difficult, and you're dealing with a lot of interesting personalities sometimes who, you know,
and you're in Boca, which all the retirees, right? Those are your clients.
All the retirees, but it's been raining a lot here. So I honestly envy you up in New York right now. But we're about to get to the nice time to be in Florida. But no, I think what's interesting about tech is it's not just an interest rate play. Look, tech has been the leading sector and the leading industry for the past couple of years when interest rates were high. You know, nowadays tech is quality. Tech is also, you know, mega cap tech is a play on the artificial intelligence trade and growth that we expect to see. And yes, you know, growth is an area of the market that's interest rate sensitive, because essentially at the end of the day, when you look at tech, you know, we have to think about the net present value of future earnings. And the lower interest rates are, the more attractive that future stream of earnings looks. So yes, we've been optimistic on tech in the past, and that wasn't an interest rate reason. And now I would say interest rates coming down is even more so a reason to become optimistic on tech. With that said, though, you don't want tech to make up your whole portfolio. Yes, we do think it makes up a very significant portion of a portfolio. But I mentioned earlier on, we're seeing a broadening out in the market. We're seeing some cyclical sectors of the market, you know, start to play catch up. So you want to make sure that you're well diversified, but absolutely tech has, you know, been a predominant role player in portfolios for the past few years, and we really don't see that changing.
Sarah, to what extent do your clients ask you about getting exposure to alternative investments, whether it's hedge funds or private equity, private credit? How does that play?
So it's becoming more of a common theme. I would say it's still a conversation that we're bringing up rather than a lot of clients coming to us and asking about it, because alternatives are so important. When we think about the universe of public companies, think about the universe of companies nowadays that go through an IPO to list on a public stock exchange. I mean, it's a very different world than it was, 10 years ago, 20 years ago. Fewer companies are going public nowadays, and many of the largest companies in our global economy, especially in the US economy, are actually still private companies. They haven't gone public. So now more than ever, it's important to get exposure to private markets because it's a whole area, a whole universe of the economy that you just don't have exposure to in your portfolio if you don't have exposure to private markets. So where within private markets, do we look? We do still like private credit. Private credit has been paying an annualized distribution yield of around 10%. Yes, a lot of these loans are floating rate, so we are going to start to see that come down, but we still see that as an attractive place to be, especially as an alternative to just traditional fixed income. Also, private equity. Private equity is, we see as a very important piece of portfolios. Talk about lowering volatility. You don't have the day-to-day swings of what you see on public stock exchanges, but still getting those strong double-digit returns in private equity. And what's also been really interesting in the private equity space is we've seen more, investor-friendly structures where you're not locked up for 7 to 10 years. You're not dealing with capital calls. There's these evergreen structures that have been produced where you can actually get out on a quarterly basis. You have more liquidity. So the environment for privates, I would say, has become much more investor-friendly over the past year or 2 years even.
Speaking of volatility, have you seen the volumes today? Triple witching day. Oh, real quick, Sarah, just a minute. How do you use volatility to your advantage as an investor for your clients?
Absolutely. So especially, look, we've seen some volatility over the past couple of months in a year in which volatility really hasn't existed. So look, on the equity side, if you're someone who sells a business, if you are sitting on a hoard of cash, no, you have emotional ties to the money. You don't want to invest it all at once. So use volatility to your advantage. Yes, have a set plan. You want to slowly dollar cost average into the market. But if you have a week or a day in which you see more volatility, maybe you speed that dollar cost averaging up. Maybe you pull your investments forwards and you use those down days to slowly get yourself invested. Because at the end of the day, the longer you're sitting on the sidelines, the longer it is to get in.
All right, Sarah, thank you so much. We always appreciate getting a few minutes of your time from South Florida. Sarah Ponczek, financial advisor, UBS Private Wealth Management here. Again, investing in a world where for the first time in a little bit more than 4 years, we actually have rates coming down. For a lot of folks, that's kind of a new environment to invest in. So we had a big move yesterday in the markets, up a couple of percent there. We have a little bit pullback here, but not much. We got the S&P off just about 0.3% of 1%. The NASDAQ off about 0.4% of 1%. The VIX, I'm calling out for Tom Keene. I know he's got a beverage of his choice in his hand. It's sitting right at 16. The 10-year Treasury yield's up 4 basis points, 3.75%. And take a look at that 2-year, 3.63%. We had 12 points, a positive kind of yield steepening there, which we haven't seen again in a number of years. On the commodity front, WTI crude oil off slightly, just under $72 per barrel for WTI crude. We'll have more coming up. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Stocks sliding. This is the day after the S&P 500 notched its 39th record in 2024. Right now, the S&P 500 down 0.2%, 15 points. We have the Dow down 0.1%, 44 points, and the Nasdaq down 0.3%, or 56 points. We have the 2-year yield at 3.64%. That's up 5 basis points. The yield on the 10-year 3.76%, and that's up 4 basis points. Commodities, we have spot gold higher, 2,614 an ounce. Brent crude lower, $74 a barrel. WTI crude, $71 a barrel. To currencies, Japanese yen down more than 1% after the Bank of Japan kept borrowing costs unchanged. It's at 144.13 against the dollar. Euro weaker, British pound stronger. Bitcoin right now up about 0.5% at around 63,000. Companies making news, Johnson & Johnson. Sources say it's lifted its baby powder settlement offer to more than $8.2 billion from $6.5 billion. J&J shares down about 0.2%. And Constellation Energy investing $1.6 billion to get its 3 Mile Island nuclear plant in Pennsylvania back in service by 2028. It's agreeing to sell all the output to Microsoft for data centers to power AI. Constellation Energy up 13%. And finally, Apollo Global Management secured $5 billion from BNP Paribas to expand in private credit. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash. Paul and John.
All right, Lisa Mateo, thank you so much. We appreciate that. John Tucker sitting in for Alex Steele today. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. All right, the Fed's cutting rates. We got that 50 basis point cut earlier in the week. That's got to be good for real estate and housing and all that kind of stuff. I'm looking at Lennar here, one of the big home builders, off 4.5% today. They reported some earnings that came in a little lighter than expected, I guess, on their guidance front. But the stock on a trailing 12-month basis, that's up close to 60%, as are most of the other home building stocks. So let's get a lay of the land, what's happening with the home builders. We do that with Drew Redding, home building analyst for Bloomberg Intelligence. He joins us via Zoom from Princeton. So, Drew, talk to us first about Lennar. They reported earnings. What did they have to say about the state of the home building business?
Yeah, so for Lennar, this quarter was really all about the gross margin. They were about 50 basis points light of expectations in 3Q, and the 4Q guide was also well below expectations. So that implies that the full-year gross margin is well below what they had previously anticipated, which was that it would be roughly in line with year-ago levels. Now, it's important to understand Lennar's operating philosophy, and that is to drive volume sales with the gross margin acting what they call a shock absorber. So from a volume perspective, the results were pretty much in line with their guidance. They're still going to close about 80,000 homes this year is what they were expecting. But I think from an investor perspective, what they're saying is, look, that strategy is fine. You're going to drive volume. You're going to generate a ton of cash. You're going to buy back your stock. But if you're giving up that much gross margin in 4Q, we would have expected to see better volumes. And I think that's what people are grappling with. One thing worth pointing out, though, is you had, for about a third of Lennar's fiscal quarter, mortgage rates were actually above 7%. So we really didn't see them pull back until August. So when we get on the call in a little bit, we're going to be listening to see how demand and incentives trended through the quarter. We expect that they'll say things were pretty soft to start, but got progressively better as we got through the tail end.
Okay, in plain English, driving more closings with margins. You're talking about they're cutting prices on the stuff they're selling? They're giving discounts?
So they do a couple different ways. It's actually interesting. Lennar has a pretty savvy technology platform that they use to determine their pricing, where they can go out, look across the markets, see what's moving, see how much inventory is out there, and that's how they determine what price to set their homes at. So in some instances, they're lowering the base prices, and in other cases, which is what we think is happening predominantly now, is that they're still leaning pretty heavily on incentives. And, they are seeing buyers respond to the incentives. I think the expectation was that as rates came down, they'd be able to kind of scale back their use. So that's what we're really going to be listening for is, when we get into 4Q and into next year, do they think that they can take their foot off the gas pedal in terms of just how aggressive they're being with incentives?
It's almost like a car dealership. You want to, you want to drive sales volumes with discounts, that sort of thing.
Yeah, I mean, it's what we're seeing. And so, Drew, I'm looking at the The Mortgage Bankers Association 30-year fixed rate, we're down to 6.15% on a 30-year mortgage. That's down from a peak of close to 8% back in late 2023. Is there a rate, Drew, that you think will be a clearing rate that will start triggering a supply of existing housing to come onto the market? Because right now people don't want to sell their homes when they're sitting on a 3 or 4% mortgage rate.
Yeah, that's a great question and something we've talked about a lot in the past. What you have to remember, even with rates coming down to 6%, you still have about 80% of outstanding mortgages in the U.S. that have a rate below 5%. 65% of mortgages are below 4%. So even with rates coming down, I think you're still going to be battling with that lock-in effect. But, what we've heard from the builders pretty consistently over the last 18 months or so is that demand has gotten noticeably stronger in that 5.5% range. So I think that if we get a 5 handle, I think it'll start to loosen things up a little bit on the existing home front. What's interesting, though, is in some markets across the country, think about Texas and Florida, you are starting to see inventory levels which are exceeding 2019, and that's kind of altering the competitive dynamic and perhaps pricing as well.
Why is that happening?
Well, Florida's a little bit unique. One, there's a lot of rental investors who are maybe putting properties back on the market. You have some issues with the condo market in Florida. You have, weather impacting insurance costs. HOA fees are going through the roof. So it's become a much less affordable market in certain instances, and primarily along kind of the west and the southwest coast.
So a lot of these home building stocks, Drew, are at or near all-time highs here. Talk to us about valuation. How are these stocks valued today versus maybe historically?
Yeah, they're up about 30% since July. And if you actually think when the rate trade for the builders and really the broader market started back in last October, the builders are up about 80%. So we tend to look at them on a price-to-book basis. Right now, they're trading at about 2.2 times. So it's the old rule of thumb has always been you buy the builders at 1, you sell them at 2, just as a general rule. It's not uncommon to see them above 2 in a market where demand is taking off and you're kind of early in the cycle. But when we get to these levels, we have seen kind of the last 4 or 5 times, call it, we've got to 2.2, 2.3, that multiples didn't really go much higher. So what I think you need to see in order for the stocks to continue to work is that the pullback in rates is having a tangible impact on the fundamentals. And one of the places you're going to look for is, as we discussed earlier, is margins. Are these lower rates going to allow the builders to take their foot off the gas pedal and dial back incentives, which would support margins?
How big of a challenge is finding land on which to build these homes?
Yeah, great question. Land has been one of the key headwinds for the broader industry, really, this entire cycle. And it kind of goes back to what happened during the last downturn. You had a lot of land developers go out of business. So a lot of builders have had to take that development in-house. I think this is one of the areas where you see that the large public home builders are really advantaged versus their peers. And that's that they have long land pipelines. They have the ability and the capital to be able to develop this land internally, and they're getting good margins off it. But when you think about smaller private peers who account for about 50% of volume in the industry, they typically will rely on regional or local banks in order for them to get their financing. And in an environment where, the economy might be slowing, you tend to see a pullback in lending. And at the same time, with rates so high, the cost of that capital is extreme. So it's tough for them to invest in their business and to continue to grow. So we think that's one of the primary places where the large, well-capitalized, publicly traded builders have an advantage.
All right, Drew, thanks so much. Always appreciate checking in with you. Drew Redding, home building analyst at Bloomberg Intelligence. John, in my town, when a house trades, if it's not built in the last 20 years, boom, it's torn down and they build up a newer, bigger, better thing. It's unbelievable.
It is absolutely. People are having such difficulty finding new homes, and it's it's a reflection of the different strata, the economic strata. You come in, take a house, pay premium dollar for it, and the bulldozers move in the next day.
You're sitting on a 3.25 mortgage. You're dying in your house, basically, is what you're telling us.
I'll be buried in the basement, essentially.
So we're going to come in there. Hey, where's John Tucker? I haven't seen him in a while. We're sitting in his 3.25% mortgage home on the Jersey Shore. That's where you can find him. S&P 500 off 19 points after that big move higher. We'll have more coming up. This is Bloomberg. These ready mixed drink things. You see, like vodka and iced tea. You see the little banners?
I have my favorite.
What is that?
It is a Mai Tai, and it's just like out of this world. Curzon top shelf liquor. I can't remember who makes it, but it is out of this world. And you can only have one, because more than that, you're in a coma.
Really? I mean, that's what the kids are doing these days. I don't know what's going on out there.
Not that I'm a kid, but...
I'll tell you somebody who knows this stuff. He knows his booze. He knows his weed. That is Ken Shea, Senior Consumer Products Analyst.
That's some intro, Ken.
Yeah, hopefully his kids aren't listening.
And he's sitting upright.
He's sitting upright, but he's been covering all these beverage companies, and he's seen every fad come and go. Ken, what's the latest kind of strategy there for, the Coca-Colas of the world, the Pepsis? Where do they see growth these days in new products?
Yeah, hi guys. So for Coca-Cola, they build themselves as a total beverage company. That's their aspiration. They want to be in all beverages. Having said that, it's also a company that is very image and reputational conscious. So it's moving at a very measured pace to get into the $2 trillion global alcoholic beverage space. So they're doing so by partnerships and alliances. So you just heard the other day they've entered into a partnership with Bacardi, the big rum company, to make Bacardi and Coke, a product that we all kind of know.
I see what you're doing. Okay.
And so it's a ready to drink. It saves people time, that kind of thing. They've entered similar kind of arrangements with Brown-Forman with Jack and Coke, Jack Daniels and Coke.
How lazy do you have to be to not be able to figure out you can pour one and pour the other?
Well,
that pre-mixed.
You have a point. You have a point there, John. But think about if you want to go to the beach, right? If you want to go somewhere to have a picnic, you don't want to carry all these bottles around and worry about ice and whatever. So it's a convenience, and consumers are willing to pay for that convenience.
All right, explain to me, Ken, because this is not John Tucker's demo. White Claw, what is this stuff? Why are all the kids drinking it down the Jersey Shore?
Well, White Claw, that's produced by E&J Gallo. They know the wine market really well. They know their demographics well. They sensed that there was an opportunity for arguably a better tasting, more modern version of a low alcohol refresher. And they really hit a home run with that product. I think it was really a game changer in the whole hard seltzer area. And it's still a very strong, entrant. That said, and not to go off topic too much, but the trend now is to have vodka-based drinks. So high noon vodka and tequila-based and vodka-based high noons are all the rage right now.
Oh, and what about hard Mountain Dew from PepsiCo?
That's not faring quite as well, but there's a niche market for these types of products. I mean, this is 5 or 6% alcohol by volume. So you see a hard product. Most of these are malt-based. They're about the same alcohol level as beer. But it's for someone who may be tiring of beer. The beer, taste is giving way to things that are a little more flavorful. I think some of our data from our surveys bear out that consumers are looking for something new and exciting and, looking for new flavor experiences beyond beer. And so there's a niche there for that.
Brings me back to my college trip with my buddies to Paris. We're in the hotel room. All we had were little vodka bottles. I was like, well, we're not going to drink vodka straight. What can we get? So we went down to the soda machine. It was about midnight. And what they had was Fanta orange soda.
Nice.
You can mix those two. There's my idea.
There, John Tucker, thank you. All you need from me is a glass, ice, and Tito's, and we're good to go. All right, so let's switch gears. Let's go to the weed business. Ken, give us the update on just kind of the development of that business here in the U.S.
Well, in the U.S., as you know, it's still federally illegal, prohibited. So the revenue growth for cannabis in the U.S. is really state by state. And so all eyes right now are on November 5th. Florida, the referendum to legalize is on the ballot.
Oh.
You need 60% of the vote. All the polls that I've seen strongly imply it's going to pass. Think about Florida, the third largest state in the country, 100 million visitors annually. Could be open for business for legal marijuana. So all eyes are on that market right now.
All right, well, here's my experience with it, and I shop for a friend, not for me. Is the dispensary in Neptune, New Jersey, is quite the nice experience, by the way. I tell you, the weed bartenders are the friendliest, most knowledgeable people I've ever dealt with.
Because they're all high.
I guess, but I mean, it's actually a good experience. So what's it been like in New Jersey, Ken, the cannabis business?
Oh, it's booming. Absolutely, it's absolutely booming. More and more are cropping up across the state, and it's been a big success so far. And
I'll tell you what. Go ahead.
No, I was going to say, but it's also inviting competition. New York legalized shortly thereafter. Now Pennsylvania's looking to do so. So other states are watching closely also.
I can tell you, in New York City, they used to have all these random kind of.
Well, they cracked down.
They cracked
down
gone. Big time. They are all gone, literally in a blink of an eye. And now there's only just a handful of ones that are approved, and there's one like on my walk to Penn Station, I see it there. But there's not many. It was out of hand there for a while, but they cracked down. All right, Ken Shea, he is our guy, all things booze and weed. He's a senior consumer products analyst. He covers everything, folks, from Coca-Cola to the cannabis business to everything. And it is a huge, huge business, huge companies, huge free cash flow. Nice dividend yields, too, for folks looking for dividend yields. Those consumer products companies have always been a place to hide and kind of a little bit recession-proof, by and large, for those names. We're going to have more coming up.
My drink, by the way, was called the Fatal Fanta.
The Fatal Fanta. There you go. In Paris, France, back in the day.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, coming up in this hour, we're going to get the latest on these markets with Norma Melinda. She's Bloomberg's equities reporter. She's going to start us off here. Then we're going to check with Poonam Goyal, Bloomberg Intelligence retail analyst. Nike CEO change, stock up here today. What's going on with our good friends at Nike? Nick Wadhams is going to join us. He's a Bloomberg U.S. National Security Team Leader on the latest coming out of the Middle East. More news there. It is Friday, which means we talk municipal bonds. Of course, Alex missed it. Matt Miller, his favorite segment. Eric Kazatsky from Bloomberg Intelligence. He covers all the munis for BI. He's going to join us this hour as well. But right now, let's go to Charlie Pell and get a Bloomberg Business Flash.
Hi, thank you very much, Paul Sweeney. You mentioned Nike. That's stock up now by 6.2%. The Dow, the S&P, NASDAQ 100 index, small caps, Russell 2000, very much in the red. Not just lower, lows of the morning right now with the S&P down 29, 56.84 where we stand. A drop now of 0.5%. The Dow lower by 88, down 0.2%. We've got NASDAQ down 115, lower by just about 0.6%. 10-year, 3.75%, with a 2-year that's now yielding 3.63%. Spot gold trading higher by 1.1%, $26.15 for an ounce of the precious metal, and West Texas Intermediate crude, little change, 72 even a barrel now, up by about 0.1%. As for the market outlook, Brooke May is managing partner at Evans May Wealth, and she was the guest this morning on Bloomberg Surveillance.
You know, when we look at right now, though, where the market's trading, we have a 5,600 to 5,800 price target on the S&P for year end. We're fully setting the expectation that we're going to have volatility over the next few weeks with the debt ceiling negotiations and an election. However, going into the end of the year, we wouldn't be surprised if we see another leg up in the market.
Brooke May of Evans May interviewed this morning on Surveillance. And by the way, you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Earnings certainly driving sentiment this Friday morning. What a week it has been. We've got FedEx shares now plunging 15.4%, down the most in 2 years after warning that its business will slow in the year ahead. An ominous sign about the direction of the American economy. Rival UPS lower as well. UPS now down by 3.7%. So again, recapping, a lot of red to wrap up the trading week, with the S&P now slumping by 29 points, down 0.5%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pella, thank you so much. We appreciate that. John Tucker sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, and we're streaming live on YouTube. So head over to youtube.com and search Bloomberg Podcast. Bailey Lipschultz, Bloomberg News, has got a great article out on the Bloomberg Terminal. Donald Trump can finally turn his more than $1.5 billion stake in his media company into cash after restrictions preventing him from selling the stock expired Thursday. There are only two problems. Unloading the shares won't be simple, and he has already promised not to do it. But this stock is down big. It's down about 5% today. It's down 20% year-to-date, 52-week low. He just kind of raises the question how much liquidity is out there. If you did want to sell,
but would you even have to sell? Couldn't you just borrow against it?
Who would lend against this stock? I don't know, and I'm not even sure. And if you wanted to put a collar on it, to put some options around this thing to preserve the value, to raise, maybe write some calls against it or whatever. I'm not sure how expensive that would be for him. So I'm not sure how he or other insiders, for that matter, would they want to sell stock, and could they do it efficiently in this market? So we'll stay on top of that. But anyway, check out that article on the Bloomberg Terminal and on Bloomberg.com. Bailey Lipschultz there talking about Donald J. Trump Media and Technology Group Corporation. DJT is the ticker. Norma Melinda joins us. She covers all the equities for Bloomberg News. Norma, what do you see in the marketplace today?
Well, I'm keeping an eye on uranium and nuclear stocks. They're surging. Who isn't?
Uranium and nuclear
I know, I'm
stocks
not
are surging.
special.
All right.
Everyone's watching it.
Wait, does this have to do with Microsoft?
Microsoft Constellation Energy.
Really?
Constellation Energy is ticker CEG. Now, this is on news that Constellation Energy, which is the biggest operator of reactors, it said it expects 3 Mile Island. I had to look that one up in Pennsylvania.
Oh, no.
I know, embarrassing for me.
How old do I feel
Embarrassing
now?
for me.
That's so
but it
funny.
expects 3 Mile Island to go back into service in 4 years to feed the power needed from Microsoft. And so this is huge for the company.
Crazy story.
Surging as much as 17% today. This is the highest intraday level ever, at trading as high as $244 per share. The company is up a whopping 104% this year when you're looking on a broader scale. Just really on a roll here.
My old man took us to the movies way back when, and in the movie theater was a movie called China Syndrome with Jane Fonda. It was about nuclear catastrophe or potential for it. Coming out of the movie, Dad, could that happen? And he said, good God, no. Next day was 3 Mile Island.
I was
Sadly
a
mistaken.
freshman. I was a freshman at the Lawrenceville School when 3 Mile Island hit in 1979, and parents, this was a boarding school. Parents from all over the world were grabbing their kids and taking them away because New Jersey was close to 3 Mile Island, taking them away.
Well, yeah, you had to, there was a time you were checking which way the wind was. Was it coming from Pennsylvania?
Right.
Wow.
Yep. And now,
The more
so
you know.
apparently there were 2 main reactors there. One is permanently shut down.
Yeah.
And the other one was just shut down a few years ago.
It had been continued to operate.
Right.
So.
And that's the one that they're going to reactivate. Great story.
Craziness. But I'm also looking at FedEx, another one that we're all talking about. That's ticker FDX. We're seeing shares tumbling as much as 16%. That's for the worst day in 2 years. And as we know, this is after it have put on an ominous sign about the direction of the U.S. economy. It's saying that business should slow down in the year ahead. And the CEO is even saying that this past quarter was very challenging. It's been really trying to slash costs that gain traction, but it's really not really been doing as much to help the headwinds.
Is that
and
a Dow
curb that
component?
there.
I'm sorry.
I want to say, I mean, FedEx, I know we follow them in industrials.
This is why Nora hates me.
Now I'm
'cause I answer
curious.
these questions.
But, I mean, that's really what's in focus. I mean, it's worst performing stock in the S&P 500 today.
Nike.
Nike, as we're moving to a more retail name, this is in focus. It's rallying for its highest level since June. And this is after it said that its CEO will be going into retirement and will be replaced by Elliott Hill. Sorry. Yes, and so that's really what I'm focusing on here. And that's really just been a revival bid. I mean, the company's really been trying to do a bit of a turnaround. The stock has been down 20% this year. So lots in focus as we're trying to figure out how this company, will it be able to actually make things different?
FDX is a component of the Dow transportation average, not the industrial average.
For those of you who care.
Friday Nugget.
Yes, exactly. All right, this is a great segue to Poonam Goyal. So thank you very much, Norma Linda, for Bloomberg News, giving us the update on the markets. Let's go to Poonam Goyal. She's a Bloomberg Intelligence Senior U.S. Retail Analyst. She covers all this stuff. Poonam, what's going on at Nike? That's still my brand. I mean, aren't they still the dominant player here? What's going on?
I'm going to say you're not the target audience.
You don't think I'm the target demo? I mean, I'm not the target demo for like anybody anymore. All right, Poonam, what's going on at Nike?
So, Paul, Nike definitely is still the largest athleisure brand in the world with over $50 billion in sales. But in the last few years, it has lost a share to Hoka, to On, and even to Adidas, if you want to say. And part of that is because it pulled out of wholesale. It pulled out of where people shop. And also it focused a little too much on the digital space, giving product really little focus. And that's why we're seeing a change today. We need someone who can come back, go back to the Nike DNA, and really focus on product performance to deliver what Nike has delivered for the last 30 plus years.
When you say they pulled out of retail, what do you mean? They tried to sell it themselves online and their website?
Well, it's not that they pulled out of all retail, but they definitely curbed their exposure into retail, whether it was through Foot Locker, Macy's, etc. They had materially pulled back what they were selling into those stores, and now they're back in. So they did come back. But what happened is if you went to a Foot Locker prior to 2020, 2019, 2018, you'd see a lot of Nike there, right? Nike was the predominant brand. And had you walked in yesterday even, what you'll see is Nike. You'll see Adidas, you'll see Hoka, you'll see On. So now people are being exposed to more brands And that's part of the reason, but also those brands are good brands, right? They have performance, Hoka for running, On for running, for lifestyle. They've really gained traction, and that's because Nike let them.
I guess it was a week or so ago, we had Derek Jeter in here with the founder of Untuckit, Chris Riccobano, and they were talking about they're introducing a new brand of performance athletic leisure. And I heard their story, I heard their pitch, but I'm like,
what in the hell does that mean?
There's so much competition in there. How competitive is that market, athleisure? I mean, nobody's wearing the suits anymore, Poonam. That thing's gone. So I guess everybody's kind of into athleisure. How competitive is that part?
So it's very competitive, but Nike's still the dominant player at $50 billion plus in sales. It is definitely winning in the shoe category. In apparel, I'd say the gap is much narrower to other players, including Adidas and others, but it's also a space that's growing, right? So as we hear more competition encroaching on the space, it's because more people want more athleisure in their wardrobe. So I'd say it's a category where it's not necessary that one has to lose for another to win. The category itself is growing globally.
How long does it take to bring a new product, sneaker, whatever, to market?
It takes more than 6 months, depending on whether it's just another color wave or depending on if it's a new performance-based product. But the pipeline is long. And remember, most of these sneakers are made in Vietnam. Vietnam is a sneaker hub. For manufacturing sneakers. Therefore, there is a transfer time involved as well. Now, you can argue that AI is going to cut some of that because the design can happen faster and you can pre-secure fabrics, etc. But still, it's still a long window.
The CEO who's getting canned, who's outgoing,
John Donahoe.
Was he a bean counter? I mean, what was the problem with this guy?
It's not that there was a problem. He was not a merchant. So John Donahoe came in with DTC exposure. So he is the one who led the digital first strategy, wanting to lean more into digital. And while that's great, it is great to lean forward into digital. But at the end of the day, retail is about product, especially when it comes to a brand. Nike is not a marketplace. It's not Amazon. Product matters most. And he just didn't have that product expertise behind him.
John, you and I know the fellow who runs this place, but if I were running this place, here's how. No shorts in the workplace and no sandals. That is Did
you know, Poonam, that Paul is the fashion police here at Bloomberg World Headquarters? And he's driving everybody crazy.
He's always in Short Hills malls for us, right? Checking out the stores.
I am. I do some channel checks for Poonam in the Short Hills Mall. All right, thanks so much for joining us. Appreciate it. Poonam Goyal, she covers all the retail stuff for Bloomberg Intelligence. She was, Bloomberg Intelligence just celebrated its 15th year anniversary. She was my first hire here, and I've hired 330 analysts, and she was #1, so that was a good one for us. All right, let's switch gears. Let's get the latest coming out of the Mideast, because geopolitics is certainly front and center for these day-to-day basis, and we can do that today with Nick Wadhams. He's a Bloomberg U.S. National Security team leader. Nick, what's the latest coming out of the Middle East? It doesn't seem like anything's simmering down over the last week or two. If anything, it's gone the other direction as we look towards Lebanon.
Yeah, I mean, I think what you're seeing right now is essentially we're in a pretty severe escalatory spiral. So you had this audacious and very controversial and as well as deadly attack in the last few days where Russia targeted pagers and walkie-talkies owned by Hezbollah commanders. 25 or so people were killed in that attack. Then overnight, we had Hezbollah launching rockets, more than 100 rockets at Israel. Israel also targeted Hezbollah in a strike overnight in southern Beirut, and now saying they were targeting a senior Hezbollah commander. So I think what you're seeing here is exactly the situation that the U.S. and many of its allies had feared, that the Gaza war would potentially touch off this broader conflict. You're now seeing Israel shift its focus to the north, to the border with Lebanon, and really what I think you're seeing from the U.S. side too is a sense of powerlessness, that they're unable to keep this thing from getting any worse. So where it goes from here, really anybody's guess, but it's not looking good.
I mean, can you have peace talks with Hamas while fighting Hezbollah?
No. I think the answer to that is almost certainly no. What the U.S. is essentially realizing now is that these ceasefire talks, the strategy for a long time had been, listen, to say Israel is on board. It is up to Hamas to get to yes on this thing. Let's push this over the line. Just bring a pause to sort of bring some oxygen back into the situation, give people a little room to breathe and try to figure a way out. But what we're really seeing is that Hamas, as well as Israel, really at this point have no interest in silencing the guns, silencing the rockets, and the other attacks. And I think what we're seeing is a situation where the ceasefire just looks farther and farther off, chances more and more remote, and a dawning realization from the administration that they're just not going to get this done before the election, and it's going to have to be something, if it happens, that would wait till next year.
Nick, do we have any reporting on kind of the support for Mr. Netanyahu from the populace, from the people on the street for this continued war in both Gaza now in Lebanon?
Well, I mean, there are different pockets of support and opposition within the U.S. I think you're seeing an administration that is increasingly frustrated with Netanyahu, a sense that he is just not listening anymore. He's sort of banking on the possibility of Donald Trump winning the election. And then in Israel, a really divided population where there's a substantial group who really think that Netanyahu is leading Israel down the wrong path, but then he is also beholden to this sort of very far-right element of his governing coalition and of the population that say, listen, more, go harder against the Palestinians, go harder against Hezbollah. We want to rule out a two-state solution. All of these ideas that the U.S. has essentially held dear for years, Netanyahu is turning away from. And if he turns away and stops mollifying the right wing of his party, his governing coalition will collapse and he'll be out of power. So a situation where no one's interests really seem to be aligning, and that's why we're in this sort of chaotic predicament right now.
Nick, is it correct to assume with those, I'll call them almost unprecedented attacks with the walkie-talkies and the explosives apparently embedded in those devices this week, is Israel sending a message to its opponents that we can get you anytime, anywhere? Got about 45 seconds.
Yes, I mean, that is unquestionably what they're doing. On the one hand, I think this is an operation, at least our sources are telling us, that Israel had put in place a long time ago and was sort of waiting for the opportunity to do this when it felt the time was right. But whether or not it was an intentional message, I mean, it's almost a psyop as much as anything else. It does show very much that they can really get these guys wherever they are.
Yeah, just an amazing development there in Lebanon. Nick Wadhams, Bloomberg, U.S. National Security Team Leader, giving us the latest reporting on what's happening in the Middle East. Again, kind of an escalation there, not what anybody wants to see. We'll have to keep an eye on that. S&P 500 off 0.6%. The NASDAQ off almost 1%. So increasing selling pressure here. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. A lot of red on the screen after yesterday's 1.7% advance for the S&P 500 index. In the red right now. The S&P is trading lower, down by about 0.5%. Stocks slipping after some disappointing earnings reports tempered the euphoria around the trajectory for interest rates. The Dow now lower by 110 points, down by about 0.2%. S&P, as I mentioned, lower by 0.5%. 56.82 on the S&P, down 30 points now. NASDAQ lower by 140, down by 0.8%. Dow Transports, by the way, hit hard today, down 3.5%. We've got the Russell 2000 index of small cap shares down 0.8%. 10-year at 3.75%, with a 2-year 3.63%. Gold advancing now by 1%, $26.12 the ounce on the precious metal, while West Texas Intermediate crude oil up 0.3%, $72.17 a barrel. Lennar shares, the home builder, down now by 4.7% after reporting quarterly home orders that fell short of analyst expectations as high mortgage rates cut into the affordability for buyers. Again, Lennar right now down by 4.7%. Recapping, red on the screen, slight bounce off the bottom for the S&P, down 31 right now, down 0.5%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Now on Bloomberg Intelligence, Munis in Focus.
All right, Focus on Munis today is brought to you by BAM Mutual. BAM Mutual insures municipal bonds that finance essential infrastructure and provides guaranteed income to improve any portfolio. Be part of building America. Invest in BAM insured bonds. That was a solid effort. We had coordination there. Charlie Pellet, John Tucker. All we missing was Matt Miller, but that was solid effort there, fellows. All right, Eric Kazatsky, he joins us here. He's a senior municipal bond strategist for Bloomberg Intelligence.
I didn't hear Eric.
No, we did not hear Eric. Well, he's the content. He's the guest here. Eric, what's happened in the muni market here? I mean, we had the Fed cut rates by 50 basis points. What's that mean for you and the folks in the muni market?
Yeah. Hey, good morning. Obviously we haven't moved that much from a rate standpoint, looking at exempts. So that would mean we had it perfectly priced in, right? Easy to say and sort of laugh and joke about that a little bit, but I think the muni market's going to take a little bit of time to get past the election and sort of fully digest, all this volatility that's going on. It's not really for us a story solely about rates. It's really about taxes, and the future tax regime is really uncertain right now.
Okay, what's a muni yielding right now? The tax-free yield, all told. What kind of bargains am I getting out there?
Well, let's look at someone like you who resides in New York, right? So on the very short end of the curve,
excuse
not
me,
really
Eric.
impressive.
Apparently he hasn't been listening to the program. I'm not far from Paul, actually, in New Jersey.
Okay, well, so not much difference right now between New York and New Jersey, except the tax rates are obviously a little bit higher in New York, right? But let's just use New York as an example because it's really easy to use that 50% tax rate. Not that impressive on the short end of the curve. You're really looking at like a 2.2%. Not great. When you factor in taxes, though, you get a 4.4 tax equivalent yield. All of a sudden, munis start to look very attractive versus other fixed income options. The beauty of munis right here with these higher tax rates in these coastal areas is really when you sort of get more duration. And so the long end of the curve, you're getting almost 7.5%, which is pretty impressive for sort of a risk-adjusted return, especially considering if the economy is slowing down or not.
But are those callable?
Yep, there is some callability to them. And as rates go down, certainly they could be called away. But I think the interesting thing in our market is that the call features tend to be 10 years. So you have a decent amount of time to sort of lock in those yields.
So in the corporate bond market, both investment grade and high yield, we've seen just a flood of new issuance over the last several weeks. Have we seen similar types of new issuance in the municipal market?
Yeah, very much so. At first, I think it was a lot of anticipation of sort of getting ahead election volatility, but the pace really hasn't stopped. We're about $378 billion year to date, and so just to give you some examples, year over year, that's about a 40% increase. So really big for our market. Obviously, there was a muted issuance last year because rates were a lot higher. But on a typical year, you're still about 20% higher in 2024 than on, let's say, on average muni year. I think a lot of this has to do with sort of uncertainty of what's going to happen given, obviously the presidential election and just the future of the tax exemption in general. We're not in the camp thinking it's at risk, but I think a lot of issuers just sort of want to avoid any sort of uncertainty at all.
As rates come down, Paul wants to refinance his house. Does the same thing happen in the muni market?
Typically, yes. But, thanks to the Tax Cuts and Jobs Act in 2017, you really can't do far out advanced refundings of muni bonds anymore. So you're really relegated to things within a 90-day window. Obviously, there's some ways to get around that. You could use taxable munis to refund tax exempts, and a lot of issuers have taken advantage of that.
Valuation. Talk to us about municipal bonds in terms of valuation on a tax equivalent yield basis compared to, similar corporates.
Yeah, I mean, let's go back to that New York example, right? Long end of the yield curve, you're getting about a 7.5% yield. You're picking up several hundred basis points over a like-rated, let's say, A-rated corporate bond. And the risk profile of an A-rated muni is much, much better over the long run on a historical default basis than an A-rated corporate. And again, we'll go back to if we're going into a recession or if the economy is slowing down, you really have an uncorrelated asset class in municipals that are, have very little statistical correlation to corporates to equities. So, something a lot of overseas buyers are sort of dialing into as well.
Is anybody out there teetering on the brink that we need to know about?
No, and our market seems to be so highly efficient, and I sort of say that with a grain of salt, that a lot of the spread and the credit risk has really been priced out because the demand has really been insatiable. Even the cuspy areas that we can point to that have very large deficits and have really been in the news, like Chicago and Chicago public schools, really aren't paying sort of the penalty in the capital markets that they were several years ago.
All right, Eric, thanks so much for joining us. Eric Kozaski, Senior Municipal Bond Strategist for Bloomberg Intelligence. He's down there in our Princeton University. Have you been down to the Princeton campus?
They won't let me for some reason. I've tried to go.
It is awesome. They just recently redid it. It's down there in suburban Princeton. They got a couple thousand people down there, I think, and a lot of smart folks down there doing a lot of stuff. Our global data, the data that's in the Bloomberg terminal all around the world, a lot of it is curated and kind of analyzed by good people down there in Princeton, the global data team.
And nice food, I'm told.
Awesome. They just renovated that whole thing. All right, let's check in, talk a little technology. I have pre-ordered the iPhone 16, making the upgrade from the iPhone 11. Tim Cook at Apple's been made aware of this. I'm still waiting, but apparently they're being delivered to the stores, I think, like today. And I'm pretty psyched up about it. I haven't upgraded my iPhone in forever. Anurag Rana, it's not such a big deal for him because he's a Bloomberg Intelligence senior technology analyst. Anurag, how important is it for iPhone 16 to be successful for Apple? What do we know about the iPhone 16 upgrade?
Yeah, I think it's very important for iPhone 16 to be successful in China, more importantly, because the US has been doing okay for the last few years. It's China where the biggest struggles are. And again, this is the one phone that has been touted with a lot of artificial intelligence features. Now, you're not going to get them today, but over the next 12 months, more and more of these software updates will be rolled out. But you do need the hardware to run those things. So, it comes with iPhone 16.
What is the situation in China right now? I mean, we know that the world's second biggest economy is slowing. Can you talk about the expectations there and just how big of a deal this potentially could be for them?
Yeah, so there are three things to think about in China. First, most people may not know, but that's the biggest market for the iPhone for Apple. It is, the biggest growth market as well as the biggest installed base of iPhones in terms of Apple's total iPhones that are out there, throughout globally. Second thing, consumer slowdown in China, that could have an impact. And the third big factor is, the local competition is really heated up with Huawei and their new phones that just came out last year for their 5G version of it. And because of that, Apple's had some issues in terms of the competitive landscape. They've had to reduce prices a few times, which they never do. So it's a very competitive market. Tim Cook has admitted to it a few times on the conference call that Apple's going to be a very tough market for them, but they will try to, fight it out.
How much of a miss is it by Apple, if at all, that this iPhone 16 that I'm going to pick up when I get back from Ireland doesn't have the AI stuff, that I have to wait for the software upgrade?
One of the things to think about it, as an Apple user, you're not going to just give this thing up and go and get an Android device just because something is delayed. And Apple is very conscious about the quality control and the way it launches either new products or new features. They don't like any mishaps. Now, it happens once in a while. They had a map issue a long time ago. They had an antenna issue, but these are like very rare instances of software updates that happens with Apple, but they're very conscious about it. So I don't think they're going to go with something that's not fully baked and works well for every user. So I don't think it's going to have an impact that much. But the big push that we are modeling in our numbers would be the next year model, which is the iPhone 17, in conjunction with all the AI features going through. We think that's going to be a bigger lift for iPhones than what's been currently released this week.
Well, I'm still trying to figure out the advantage I have with 5G on my phone.
Yes, exactly. Remember when that was all the rage?
That was the rage. What's the benefit of the AI features that I'm going to enjoy?
I think a lot of that has to do with people who are using voice control or are able to, I mean, I would call them very power users. And you talked about 5G. That was the last time these guys got a push in the shipments. That was FY21, 22. We think that big refresh cycle is going to play a little bit this year and more next year. As for a lot of the customization on your phone because of on-device AI or because of OpenAI. So let's, for example, you want to do some kind of, OpenAI query. You would have to go to the OpenAI app and do it. But now you can do it with Siri for those people who are active users of, these AI-based applications.
All right, Anurag Rana, thanks so much for joining us. Anurag Rana, Senior Technology Analyst for Bloomberg Intelligence. So as it relates to AI, John, Gene Munster from Loop Capital, and again, one of the leading technology voices, I think, out there on the street for many years, he put AI in this context. Like, if you think about a continuum of importance of things that have happened in society, you put electricity maybe at 100 on a scale of 0 to 100, electricity at 100. You put the internet at maybe 60 or 70. He thinks AI is like 99. That's how big he thinks it's going to be in terms of just overall importance in everybody's life going forward.
So a new industrial revolution, or
I guess. I don't know, because like you, I struggle to find, like, if I had to say in 20 words what is AI, I don't know. I mean, how am I going to use it? I don't know.
And is it a job destroyer or a productivity enhancer?
Right. Well, I think it's, my understanding, some of the applications, certainly a productivity enhancer significantly, but to the extent that it replaces jobs, that you could make that leap very easily, although they being the technologists out there say, no, it's not the case. It'll just free up time for you to do other things, more value-added things. I could see it, though, as a cost-cutting mechanism by a lot of entities. That's how I think about it.
We shall see.
And if you're a writer or anybody who creates content, like you're a Hollywood writer, you bake that into your recent contract. That was all the strike for the Hollywood. That was a big part of the reason for the strike, and what the Hollywood writers wanted is protections from AI going forward. So we'll have to see how that plays out. Markets selling off just a little bit here today, off about 0.5% on the S&P 500. Nasdaq's off about 0.6%. We've got more coming up. This is Bloomberg.
bringing together enough talent in one organization is really hard to do. And if you're working on a problem that, may be modestly successful, it's kind of easy to get the first few people to join. You can give them a lot of equity. But then it gets really hard. Why is employee 20 going to join? Why does this matter to the world? Why should someone work on your startup versus any of the other things they could do? And picking something that matters if you're successful is a great way to do that. And so I think it's really important to think about when you're starting the company, how is this going to evolve into a vision that a lot of people want to help with, that a lot of people want to be associated with? Because I think getting talent and getting mind share is really hard in the current environment, and people are interested in startups that matter. Another thing that we've noticed among our best founders again and again and again is that they have a confident and definite view of the future. They may be wrong, and so we say it's good to be confident and flexible, but this idea that you are confident and definite, this is what I think is going to happen, or this is what is going to happen, and being relatively sure of that, having courage of your convictions, being a clear leader, saying we're going to do this, and that's why, even in the face of a lot of doubt, that seems to really correlate with success. And this comes back to having an ambitious vision, but the entire startup ecosystem is best set up to support companies that have a low chance of success, but are huge if they work. And I think going for something that is huge if it works will attract the best people. I'm not going to talk too much about the team. There are a lot of obvious things I could say that have been said many times by many people about, you need smart people who want to work really hard and who communicate well. These are all really true. But I'd like to mention a few non-obvious things that we've noticed that we don't hear people say as much about the team you need to assemble. Vinod Khosla says that the team you build is the company you build, and I really think that's true. I've still met only a handful of founders, I think, that spend enough time on recruiting, like Mark Zuckerberg is famously one of them. But building a great team, I think other than picking the right market and building a great product is the most important thing you do. All founders go through a transition, all successful founders, where you switch from building a product to building a company, and building a company really is about the team. So you need optimists. The whole world will be telling you why you're going to fail as a startup. If you don't have that internal fire of belief, if you don't have people who say, you know what, we are going to do this, and it doesn't matter what the haters say, we're going to figure this out. And there is, this problem, it must be solvable. If you don't have the spirit of optimism on the team, it's very hard to succeed when the world continues to punch you in the face. You need at least some idea generators. There are a handful of people in any company that has gone on to be really successful that I've been able to work with who are just really good at coming up with lots of ideas. You don't want too many of these people because that's more ideas than a company can follow through on. But having some people within a company that are just constantly throwing out new ideas, most of which will be bad, turns out to be super important to have on the team.
The fact that they're taking out an insurance policy so as not to risk a recession. It's almost, verbatim to what the newspaper headlines and the commentary read, way back on, January of 2001 when the Fed, similarly surprised with a 50 basis point cut in the Fed funds rate. Obviously, no parallels exactly the same, even if it rhymes. But, clearly there's this very big dichotomy at this stage between economic data, which the Fed is relying upon, versus what we're seeing in terms of expectations for corporate profits.
Okay, the Fed, as you put it, is taking out an insurance policy. Should I be investing in some sort of insurance in a portfolio as an investor?
Yes, you should. Absolutely. I think, from our take, we think global economic growth stays like in this low gear. We're not in a technical recession, but we're very much vulnerable to a demand shock in the United States, much like the economy was, I hate to say it, back in 2001, prior to 9/11. So, from our perspective, the winners are going to be, treasuries, defensive growth stocks, infrastructure, utility stocks. The key for us is going to be if companies can somehow maintain the very lofty earnings expectations that are embedded in stock prices today and not disappoint like Federal Express did today. And if the Fed can somehow, move policy rates towards what 2-year note is, that is, down toward about 4%, which would equate to about a 2% real yield, 2% inflation. I'll be the first person to vote that they rename the Eccles building down in D.C. for Chairman Powell.
So, James, what are some of the sectors, I guess, that screen well for you? And how do you select equities, generally speaking, and what's looking good these days?
Yeah, that's the thing. I mean, we're pure bottom-up investors, and we always try to reconcile what's going on bottoms up to the top-down information. And, the story that I talk about today is, if Rip Van Winkle was asleep, right, and he woke up and you only showed him top-down economic data, you'd look at U6 unemployment, moving sharply higher, trucking, construction, steel production softening, ISM manufacturing and contraction, inverted yield curves, collapse in global commodity prices except gold, China, European economic stress getting worse. And you saw, anecdotally, new car registrations in Europe down 18% year over year in August, disastrous profit warning from Mercedes-Benz, auto and credit card delinquency spiking higher. Rip Van Winkle would say we're already in a recession, if not, moving into a shallow one. But, if you showed Rip, price charts of the S&P 500 and concerning consensus earnings expectations, he'd see a PE of 22, margins, at all-time highs, and a standard deviation above 20-year averages, and sell-side expectations of 6% top-line growth and 15% earnings growth for 2025. So Rip would say that we're on the cusp of a boom in profit growth without having ever entered a recession. We're more leaning from a bottoms-up perspective towards what the economic data is saying, which is back to the point of defensive equities, the fact that treasuries will probably outperform credit and maybe even equities at this point in time, and a cautious stance towards profits. And I think this earnings season coming up is probably going to be the most important season that will dictate the future direction of what stock prices will do for the next 6 months to 12 months, more so than what the Fed does, more so than what the presidential election results are.
Broadly, what's your allocation right now in a percentage? Break it down that way.
Well, if you look at, we run one dedicated infrastructure fund, which is actually having a spectacular year because we're recognizing that, utilities have gone from being bond proxies to, in essence, growth proxies with the power generation needs of AI and other things. But in our American Select Equity strategy, we've introduced long-duration treasury bonds. That's the first time I've done that in an equity portfolio since early 2000. So maybe that tells you something. When you look at our sector overweights within our American Select, our biggest overweights are in consumer staples, healthcare, and we're dramatically underweight all cyclicals. But we do have some exposure within the Magnificent Seven because you continue to see those stocks being very driven by the fundamental momentum towards this AI craze. And we're not sure when that is actually going to end. And these companies are demonstrating some degree of excellence.
All right, James, thanks so much for joining us. Always appreciate getting a few minutes of your time. James Abate, he's a managing director, the chief investment officer at Center Asset Management, located in lower Manhattan here. Looking at the market here, just a little bit of a give back from the strong performance we had yesterday. A lot of volume out there, as Alex Steele has been highlighting since the beginning of trading today, because we have the triple witching, triple expiration of some of those options and all that kind of stuff that I really don't understand. Alex she's kind of
so the volume S&P 500 for this time of day 40% higher.
Yep.
Than the 30-day average for this time of day.
Yep.
The Dow 78% higher.
Yeah, just extraordinary. So we're seeing it out there. S&P 500 off 0.3%. The NASDAQ off about 0.4%. 10-year Treasury, that's yielding 3.74%, up 3 basis points. And we've got about 16 basis points of positive steepening in the 2s and 10s. That's after a couple of years of an inverted yield curve. which typically predicts a recession, but not so much this time, at least. We'll have more coming up. This is Bloomberg. Good morning.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, it's John Tucker sitting in for Alex Steele and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on that YouTube thing, youtube.com. Search Bloomberg Podcast. Well, it is Hispanic Heritage Month, and every day at this time we are celebrating significant moments in Hispanic heritage. Now with your installment for September 19th, here is Bloomberg's Lisa Mateo.
You got it. On this day in 1519, Portuguese explorer Ferdinand Magellan, with 5 ships and a crew of 270 men, set sail from Spain to find a western sea route to the rich spice islands of Indonesia. Now, it would become the first circumnavigational of the world. Magellan sailed to West Africa, then to Brazil, where he searched the South American coast for a strait that would take him to the Pacific. But it wasn't until October 21st, 1520, when he finally found it at the tip of South America. That would become known as the Strait of Magellan. Now, although Magellan did not survive the rest of the trip, one of the ships, the Victoria, did, arriving back in Spain on September 6th, 1522.
Yeah, he was killed in the Philippines. And you know there's a memorial to him in the Philippines at a church. He brought them a statue, and it's still there in this church in the Philippines where he was eventually killed.
John Tucker, with insight.
Worthless trivia.
History, wealth of knowledge.
I mean, what are those people doing back then? I mean, who says I'm going to get in these little rinky wooden ships and sail across the ocean?
570 men.
I mean, what are these people? I'm complaining because I have to fly coach over to Dublin tonight, you know, and I'm not going to get the lay flat bed. I mean, who are these people? All
You're
right,
gonna
Lisa
be all
Mateo,
right.
thank you so much for that. We appreciate it.
You weren't expecting our involvement in
Yeah,
Hispanic
we're
Heritage
expecting-
Week. Your
exactly.
update.
We're all in Hispanic Heritage Month. All right, John Taylor. He's John Tucker. He's sitting in for Alex Steele and I'm Paul Sweeney. All right. I'm going to be out in New York City next week. Boy, I didn't plan this any better. New York.
Wait, am I filling in for you?
Probably.
Oh,
UN, the United Nations, is in session next week. That is not good for New Yorkers, folks, particularly if you're on the east side of the island like we are. Sheree Taylor joins us. She's a municipal finance reporter for Bloomberg News. How many people come to New York during United Nations Week? Like, it's a lot, right?
Yeah, I'm sure hundreds of thousands of people coming here. And Trump and Kamala and Biden and Vance were all here kind of leading up to the General
We
Assembly.
got a taste of what the General Assembly traffic is going to be like.
It was New York Fashion Week as well. So, you know, New Yorkers have already been kind of grappling with those closures, and that really stopped up traffic. But this is probably going to be even worse.
But we know who Donald Trump is. We know who Kamala Harris is. We know Joe Biden.
Right.
And yeah, you're going to shut down roads for this. I would posit that most of the diplomats attending the General Assembly, like 95% of them, people wouldn't recognize them from, you know, Paul Sweeney.
But you still have to block
Just
roads
take the
off.
subway.
Securities.
Well, the subway probably won't be any better.
For the diplomats. No, not us.
Yeah, and then they'll have to deal with the delays and
Because there's
and
not
the
a security
cancellations
issue if
like
nobody
everyone
knows who you
else.
are.
Yeah, exactly. But, you know, New York has declared gridlock alert delays for all of next week, saying that the average vehicle speeds in Midtown during past UN General Assembly meetings have averaged less than 4 miles per hour. So that
All right.
is very,
According
very
to your reporting,
That's
I'm quoting
racing.
you, among major U.S. cities, New York has seen the largest rise in both driving and gridlock in the aftermath of the pandemic. That may be partly due to growing annoyance at public transit options in the city. So we're starting from a bad base.
Oh, yeah.
And then we're adding the United Nations in.
Right. So, I mean, the other options aren't that great. The New Jersey Transit Amtrak services have been riddled with delays, cancellations. There was just a crash by the Lincoln Tunnel. So, you know, commuters have been dealing with a lot this past summer. So,
All right.
you know, other
Again,
options.
I'm going to stand up for New Jersey Transit. Having ridden it for 35 years, it gets me in and out of this silly island every day.
For the most part.
More or less on time, safely. I don't know. I will die on that hill. New Jersey Transit, while it can be frustrating.
And you have to do the follow-up with New Jersey Transit, specifically with the Portal Drawbridge, the construction of the North Portal, which were the multi-billion-dollar project to replace 100-year-old span crossing over the Hackensack River. That is major, and it looks like when I pass over the turnpike, the one spur coming into the city, it looks like they're about 3/4 of the way done with that.
Yeah.
So that's going to be a huge.
And I'm going to stand up for the MTA. The subway, again, 40 years from me, maybe 45 years from me, it's the best way to get around the city. And so many people I argue with this.
Oh, yeah. Well, I'm a Jersey girl, too. I've been riding the New Jersey Transit for all of my life, so I feel like I've paid my dues.
You paid your dues, so you know what you're talking about.
Yeah.
Okay.
And, yeah, those delays do kind of they get grating after a while, and that's been especially true for
Okay, so
commuters
the
this summer.
General Assembly's meetings start Monday, all of next week, and there's a gridlock alert for the entire week.
Yes,
So the message is don't drive into Manhattan.
The message is try not to drive, try to bike, try to walk, try to take the subways.
So could I take a bicycle from the Jersey Shore to Manhattan?
Yeah,
at
I mean,
3 o'clock
pull
in the
that
morning.
baby, yeah, sure, on the Parkway, then up to the Turnpike, through the tunnel.
They'll let me
No
take
problem.
a bicycle on the
Sure,
Turnpike and through the Lincoln Tunnel?
No problem whatsoever. I like the Parkway because there's, no trucks. That's a good thing there. All right, Sheree, thanks so much for joining us. Sheree Taylor, she covers all the municipal bond stuff, and she put out a great story today. You can check it out on the Bloomberg terminal on Bloomberg.com. If you're anywhere going to be near Manhattan next week, you need to read the story and be prepared because it is a gridlock alert week next week here in New York. Again, particularly on the east side of the island. It gets a little bit better on the west side of Manhattan. But we happen to be here at 58th Street and Lexington Avenue. So
Can I
we're
just
still
point
about
out they're having a fueling problem, and that's caused a ground stop up at in Boston if you headed there or you're there at Logan Airport. So just
Okay.
that's causing all sorts of delays.
More news you can use. We are all over it. That does it for Bloomberg Intelligence here. I'm off next week, baby. Gonna be in the Mother Island with my people in Ireland.
Yeah. You may not come back.
There may be a Guinness in there at some point, but Alex Steele will be happy.
Nice. Months ago, and I learned how to cut the G.
This is Bloomberg.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
46 days to the election, just 11 days to a government shutdown. Welcome to the fastest show in politics, where we bring you today the latest on both, including the salacious story from the swing state of North Carolina that could turn the race on its head in that state. With us this hour, we go to North Carolina with J. Michael Bitzer, chair of the politics department at Catawba College. And we have breaking news that just hit the terminal with a headline now. The FTC, courtesy of Bloomberg's Tyler Kendall, she'll be with us in just a moment to tell us more. We'll have analysis today from our political panel. Democratic analyst, Bloomberg politics contributor Jeannie Shanzano is with us, along with Republican strategist Maura Gillespie of Blue Stack Strategies. So let's get to it. As always, we start on Wall Street with Charlie Pellet in New York. Hey, Charlie.
Hello there, Joe Matthew, and worth repeating the headline. The FTC suing CVS, Cigna, United Health over insulin rebate programs. We'll have more coming up right here on Balance of Power. Right now we have got U.S. stocks. They are trading lower across the board. The Dow, the S&P, NASDAQ in the red. Bottom line here, off-session lows. Yesterday we saw the S&P gain 1.7%. Today we are down by 0.4%. Dow in the red as well, down 77 now, down by about 0.2%. NASDAQ down 83, drop there of 0.5%. 10-year yield 3.73%, with a 2-year now at 3.58%. Gold up $35 the ounce, up 1.4%. 26.22 on the precious metal, while West Texas Intermediate crude holding just above 72 even a barrel, right now up by about 0.1%. Bottom line here, stocks lower. Laura Goodwin is chief market strategist at New York Life Investment Management, and on surveillance this morning, she advised caution ahead of November.
Why would you make a ton of moves, including Fed voting members who are making these estimates, until you know the outcome of the election? Now, the election isn't typically the pivot point on how to invest, but what we're looking at is an environment where a sweep in either direction is likely to mean more spending, more inflation, probably more durable rates, also probably more volatility as markets are concerned about the level of deficit in the U.S. economy.
Lauren Goodwin of New York Life Investment Management. After earnings, FedEx shares plunging, down by 14.3%. Rival UPS lower as well, down now by 3%. Lennar reported this morning, the home builder down by 4.7%. Again, repeating the headline, the FTC is suing CVS, Cigna, United Health over the insulin rebate programs. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now or wherever you get your podcasts. I'm Charlie Pellet. Balance of Power continues now. Once again, your host, here he is, Joe Matthew.
All right, Charlie, thank you so much, and happy Friday. We'll get back to Charlie Pellet for more on the markets as we make our way through hour one here of the fastest show in politics. Thanks for being with us at the threshold of the weekend on Bloomberg Radio, on the satellite radio, and on YouTube, where you can find us right now. Search Bloomberg Business News Live, because you're going to want to hear this story as Charlie just cracked the door on it. It's a big deal here for pharmacy benefits managers, and a story that Bloomberg's Tyler Kendall has been working on for weeks. We can finally bring you some information now on what involves 3 publicly traded companies and could be the beginning of something larger. Tyler, thanks for being with us here at the table. What do we know?
Yeah, hey, Joe. So a Federal Trade Commission source tells me that this has been a long time coming. The agency taking this administrative action against 3 of the largest U.S. healthcare companies and their subsidiaries, as you mentioned, PBMs, pharmacy benefit managers. We'll name them again just one more time. CVS's Caremark, Cigna's Express Scripts, and United Health's Optum RX. They essentially serve as the middlemen, right, who help negotiate rebates on behalf of insurance companies with these prescription drug manufacturers. And this specific administrative action is focused on insulin. The FTC is essentially alleging that these PBMs have been pushing for higher cost insulin products because that in turn would result in higher benefits and higher fees for the companies. Of course, insulin has been a big political issue here in Washington, not just for both sides of the aisle, right? You have Lena Khan, considered to be more of a progressive regulator at the FTC, but you actually also caught up with Republican Congressman, the head of the powerful Oversight Committee, James Comer, a few weeks ago, who told you that he also was looking into PBMs and what it could mean for prices for Americans. I think we have that cut now if we can listen to it.
The PBMs are called, their pharmacy benefit managers were created to be the middleman, created to help negotiate the price of drugs, to make drugs cheaper. But what's happened over time is the PBMs have been purchased by the insurance companies who have purchased the pharmaceutical, the pharmacies now, so they're vertically integrated, and they're actually gouging consumers as opposed to saving consumers money.
So, Joe, this FTC suit and administrative action actually caps off a 2-year investigation by the agencies into PBMs that you were hearing Congressman Comer talk about there. A report recently released by the FTC finds that these 3 companies see 80% of the prescription drug refills flow through their companies, so they clearly have a large market share when it comes to this. Now, this headline just crossing now, the FTC just filing this administrative action, so we have yet to hear from the companies, but you could tell that they were kind of gearing up for this fight after the FTC dropped that report earlier this year. They say that they are negotiating on behalf of consumers and that without them, consumers would be essentially going straight to the prescription drug manufacturers. And interestingly enough, one of the companies, Cigna's Express Scripts, actually already put forward a preemptive suit, perhaps, alleging defamation off of the FTC's report released.
So just wait for the next wave here, I guess, in terms of a response. Tyler, this is fascinating, and you mentioned that it centers on insulin, which you're right, it's become a big campaign trail issue. In fact, both Joe Biden and Donald Trump like to take credit for capping the cost of insulin, which was a big priority for the start of the Biden administration. Could this widen, though? Could this set the precedent for other treatments or drugs?
Definitely. Well, it's notable that in this particular administrative action, the FTC did not bring anything against the prescription drug makers, although they did leave open the door potentially for that, like some big names that we know, like Eli Lilly. But also, the FTC is really looking to kind of use this to lay the ground for some other prescription drug costs. Like you mentioned, this is becoming a big political issue here in Washington. Both the candidates have been touting the administrations they've been part of and what that could mean for lowering prescription drugs. I'd point you most recently to the Inflation Reduction Act, which capped insulin prices at $35 per month for Medicare, for those on Medicare, but it remains to be seen what can be done for those on private insurance.
Well, this is great information. That's something that you'll continue to hear about from Vice President Harris on the campaign trail. It's interesting how she adopts some things closely associated with Joe Biden and distances herself from others. But this is a winner on the campaign trail, right? That's why we're hearing it from both sides. Tyler, thank you so much. Find more on the terminal and online. And a great story that Tyler's been pursuing here involving these pharmacy benefits managers. PBMs, as they call them. Tyler Kendall at Bloomberg, thank you as we join you today live from Washington with much more ahead on the campaign trail. Certainly a wild story that came out of North Carolina last night. We were in the late edition of Balance of Power trying to get our arms around this CNN report that involves the lieutenant governor. This is a man named Mark Robinson, realizing you may not have been following the lieutenant governor in North Carolina, but he's running for the real job. Roy Cooper, the Democrat who runs the governor's mansion right now, is term limited. He's actually going to be joining Anne Marie Horduran a little bit later on today on Bloomberg. And so there's a race underway right now to replace him. Mark Robinson wants the big job. As of midnight last night, the ballot is carved in stone. He cannot be removed. So this is our race no matter what. And if you've been following this, it's pretty salacious stuff. I've already had to go through this a couple of times on the air, and I sort of regret it each time. But Mark Robinson is reportedly playing around in some pretty interesting social media platforms and on websites in which he has referred to himself as a perv and a black Nazi. This is not the kind of language, obviously, that helps you win office, particularly in a state where the presidential race is a one-point contest. Now, we wanted to talk to somebody who had a better sense of what was going on the ground. This has been a big headline maker around the country, of course. But how about in North Carolina, where we find J. Michael Bitzer, runs the politics department. He's chair of the politics department at Catawba College in the Tar Heel State. Michael, it's great to see you. Thanks for joining us today on Bloomberg. Is this something that people in North Carolina were already talking about, or did you find out when the rest of the nation did yesterday?
Well, there had been a lot of conversations regarding how much bad news would be dumped on a candidacy by the Lieutenant Governor Mark Robinson if he was the gubernatorial nominee. In fact, some of his primary opponents, Dale Folwell, the state treasurer, Bill Graham, an attorney, tried to allude to the Republican electorate. Look, if we nominate this gentleman, we will have serious problems come the fall campaign. And so those of us here in North Carolina have been hearing through the kudzu vine line that indeed there were some issues. We've known about his rhetoric. We've known about his controversial statements. But this really hit the state much like not a political earthquake, but much more like a political asteroid.
Well, there you go. It's not lost on us that this all dropped the day before the ballot deadline. You kind of wonder where the Oppo book was until now. But we did hear from Mark Robinson, and we should hear from him now for the sake of our audience. He was answering to these charges on CNN. Here's what he said.
You all have seen the half-truths and outright lies of Josh Stein on these ads over and over again. And now a story leaked by him to CNN is appearing now. Let me reassure you, the things that you will see in that story, those are not the words of Mark Robinson. You know my words, you know my character, and you know that I have been completely transparent in this race and before.
Well, Michael, it does seem you know his words, and you don't sound surprised today. How about the people of North Carolina? This has got to be the top story locally.
It is indeed locally and across the state. And I think really the fallout is still descending upon the state. You know, we've already had some local Republicans say, you know what, for the good of the party, you need to withdraw. This was yesterday. We've had one now state senator, a Democrat, say, you need to resign as lieutenant governor as well. But he was very adamant in his video post that came out about 10 minutes before the CNN article was posted and said he wasn't going anywhere. And so the ballots have been mailed out to military personnel as of midnight last night. The ballots will go out to North Carolinians next week who have requested absentee by mail ballots. So we have Mark Robinson on the ballot for November 5th.
And boy, he's not doing well in the polls. The two recent I was looking at today, the Hill and Emerson College has Josh Stein leading Mark Robinson by 48 to 40%. The Carolina Journal Signal poll finds Stein leading Robinson 46 to 39, a 7-point lead. If this race is lost for Republicans, what does it mean for the top of the ticket, where there is a 1-point race here, depending on where you look, the two I just mentioned? You've got Harris leading Trump by 1 and Trump leading Harris by 1. So this thing is tied.
Yeah, and everybody is expecting it to be tied until November 5th. I mean, we are basically a 51-49 Republican federal state and a 51-49 Democratic statewide state executive office state. And so certainly the question is, if the fallout from the Robinson campaign and this article does affect the top of the ballot, but also down the ballot as well. We've also got some controversial Republican candidates, one of whom is running for superintendent of public instruction, very controversial statements made by her as well. The question becomes, does the Robinson issue affect down the ballot as well, and also into the state legislative races? The expectation is that Republicans will continue to control the North Carolina General Assembly, but they are at supermajority numbers. That is potentially in danger now. So it's going to have a huge consequence. We're going to have to wait for at least a week to see the actual dynamics. But this was really brought on by Republican primary voters. 2/3 of them supported Mark Robinson. He was the Trump candidate 2 years ago. They supported Ted Budd and Mark Walker as the Trump candidate. 2/3 of them voted for those two candidates. So this is really the North Carolina Trump Republican Party.
Well, Donald Trump called him Martin Luther King on steroids. I wonder, does this move MAGA voters, Trump supporters in North Carolina, or is this really about affecting the few undecided voters that you have left?
Yeah, we're about a 3% undecided or persuadable voters who bounce down the ballot. I think that this will really have an impact on them. The other core constituency is what I would call the Nikki Haley primary Republican voter. We've already seen major Republicans in North Carolina start Republicans for Harris. Yesterday, we saw Republicans for Stein. So if there is a significant percentage of Republicans who say, I just can't support either the presidential or the gubernatorial candidates, that small sliver of Republicans flipping over and going against party loyalty to vote Democratic would have huge consequences electorally come November 5th.
When do your early ballots go out? I remember they were delayed because of the RFK lawsuit. When are people actually going to start voting in North Carolina before November?
So we'll actually probably have ballots from the military overseas voters registered and accounted for tomorrow. Those ballots went out today. All residential North Carolinians who have requested an absentee by mail ballot will get those next week. So we'll start accumulating, banking those ballots. But the big push will really be absentee in person, the early voting that will start on October 17th. The vast bulk of ballots will be cast before November 5th.
So less than a month away, and this thing drops. You know, in our minute left, Michael, what does this mean for the Kamala Harris campaign? Is it time to flood the zone in North Carolina?
I think we're already seeing it. She's got ads running up on various social media platforms tying Donald Trump to Mark Robinson. You're going to see other Democrats do that. Jeff Jackson has done that to Dan Bishop in our attorney general race. She has really put in the infrastructure and the resources. I would not be surprised if she just doesn't start flooding the state with those kinds of connection ads.
Well, are we glad we found J. Michael Bitzer? This is great, Michael. Thank you so much. He's not just running the Department of Politics at Catawba College. You can find him on Twitter or X with the handle Bowtie Politics. Michael, have you ever met Tom Keene here at Bloomberg? Do you guys hang out on the weekends?
I have not, but I would be honored to do so.
We're going to make this happen. All right, remember I asked you this. We're going to connect you guys. I think you might have been separated earlier in life, but I hope that you come back and talk to us about what in the world is going to happen next in North Carolina. J. Michael Bitzer, what a treat to have him with us here to start things off on the Friday edition of Balance of Power on Bloomberg Radio. North Carolina, one of the 7 swing states that we're tracking here at Bloomberg. See, we don't fool around. Donald Trump's heading there tomorrow night, by the way. Mark Robinson will not be on stage. I'm Joe Matthew. Thanks for being with us on Bloomberg.
It's 12:20 on Wall Street. We do check markets all day long here at Bloomberg. Federal Reserve Governor Christopher Waller says favorable inflation data and not worries about the labor market are what convinced him to support policymakers' decision to lower interest rates by a half percentage point this week. Waller's remarks coming in an interview with CNBC. The Wall Street rally on pause today. Tech stocks are slumping. We begin with NASDAQ, the composite index, down 0.3%. The NASDAQ 100 index down 0.4%. S&P, to put it all in context, down 18, drop right now of 0.3%. The Dow lower by 0.1%, down 36 points again off session lows. Russell 2000 index of small cap shares down now by 0.6%. 10-year yield 3.72% with a 2-year that's now yielding 3.57%. Gold is surging $38 to a record $26.25 the ounce, up 1.5%. And West Texas Intermediate crude oil up 0.2%, $72.10 for a barrel of WTI. Federal Trade Commission is suing units of CVS, Cigna, and United Health, accusing the drug middlemen of engaging in illegal rebate programs that are driving up the price of insulin. CVS shares down 1.6%. Cigna shares, they are unchanged. United Health down now by 0.3%. Apple is stocking those new iPhones today. Apple facing an unprecedented challenge, though, and that is persuading customers to buy the latest iPhones without their biggest new feature, and that is artificial intelligence. Apple today up 1.1%. Recapping, S&P lower by 14, down 0.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. Balance of Power continues. The Friday edition. What a week back. We go to Washington. Once again, Joe Matthew.
Here we go again saying that on a Friday, Charlie. We see at the end of every week because it's true. Thanks for being with us. Yes, on the fastest show in politics, and good to see you here on YouTube. Thanks for listening on Bloomberg Radio. And if you're with us in Boston on 92.9 FM, thanks for making this part of your new routine. It's great to get together and talk about these issues that matter and maybe find some fun here at the threshold of the weekend. On the trail today, it is Kamala Harris back in the swing states doing Atlanta, Georgia. We've got a campaign event, the 3 o'clock hour here, focused on the state's abortion ban. She's going to Madison, Wisconsin for a nighttime event and then back to Washington. Yes, it's the swing states that matter. But as we look across the country, a lot of other states that we're going to be focusing on here that have been impacted by what many refer to as the crisis at the border. And when you consider the backdrop here of what's happening in Springfield, Ohio, and to a lesser degree, Aurora, Colorado, it brings you to a really fascinating column here, a big take at Bloomberg by our friend Sean Donnan, who shares the byline here. Migrants are settling in thriving blue counties, not the red counties that need them. This is a great piece, again, of research, data-driven journalism that brings truth to something that we hear a lot of platitudes about. Remembering that the Republican refrain about Democrats is they want as many illegal aliens and migrants to come across that border in any form they can get to change the shape of the electorate. Elon Musk talks about this a lot, that you'll turn the entire country into this immigrant-driven communist state. Eventually, you will only have Democrats elected. But let's get real. This is Bloomberg. Let's find out where this is actually happening. Few issues figure as prominently as immigration as the column states. And more importantly here, in terms of background, Bloomberg News analyzed immigration court data obtained by researchers at Syracuse University that actually show where the 1.8 million asylum seekers and refugees who landed in the U.S. in the year 2023 have taken up residence. That's where we start our conversation with Sean Donnan, aforementioned Bloomberg senior writer for economics, and with us again on the program. Sean, it's great to see you. Congrats again on just a big piece of work here. And I love these stories that bring truth to very controversial topics that people talk about a lot without knowing a lot. What are you learning here based on these 1.8 million people and where they've settled?
Yeah, thanks so much. I appreciate the kind words. I think, we set out here to really look at what we could say about where these migrants have landed in the U.S. And we focused in particular on the swing states in the U.S. We know that this is a huge animating issue in this year's election. We also know that election is likely to be decided in 7 states. So we thought, let's look at where these migrants have ended up. And we're in this kind of rare period in American history where we actually have good data on undocumented migrants because many now if they cross the southern border, they hand themselves in and they kind of enter the immigration system. They enter the immigration court system, and they are given something called a notice to appear. And when they do that, they nominate an address somewhere in the United States. It's often the address of a family member or a friend where they're headed, and they're kind of allocated to immigration courts around the country as a result of that. And that goes down to the county level. And so we're actually able to look at, in a much better way than we have been for many years, at where immigrants are going. And you know, part of this is unsurprising. We're seeing immigrants to America today do what immigrants to America have done for centuries, and that is to go to the places where there's economic opportunity, right? Where there's a local growing economy. And many of those are some of the bigger, bluer metropolitan areas in the United States, and that holds true for swing states. But we're also at this interesting economic moment right now where, as a result of aging populations, demographic changes that see baby boomers kind of falling out of the workforce as they retire, we know, and we've read a lot about this in recent years, that there are shortages of workers in many places. And in fact, some of the counties that need workers most are in fact red counties in these swing states, places that have a shrinking population that are really facing an existential dilemma. And those are the places often that are supporting Donald Trump most heavily, or have in past elections, and where you really see this kind of tension between what they need economically for the local economy to survive, and that is more workers, and the politics this year, and especially the heated politics around immigration.
Well, this is fascinating stuff, as you find in the battleground states that will decide the election, and we'll stick with these 7 for now, as we kind of do every day on this program. About 72% of migrants in 2023 went to Biden counties. So you just said a couple of things, Sean. Was that because of economic opportunity? Was it because of more friendly policies in blue states? Or was it because of just the cultural lay of the land in what we call Biden states, or all of the above?
Yeah, look, I think the answer is a combination of all of the above. We also know that the biggest population centers are often the bluest parts of this country, and that plays into it. They are bigger economies at the kind of local or municipal level. So I think that's part of it. But you also have, we spent part of our time in reporting this piece in Gwinnett County, Georgia, which is just outside of Atlanta, and is a place that has for decades now seen its population transformed through immigration. It has a significant foreign-born population that has settled there over the last 20, 30 years. And that has really transformed the county and so on. It's a place that prides itself on being welcoming to migrants and to people from other cultures. And that is really there in the local governments, there in the services. We went to the local schools where they literally have an office with translators and other counselors that's set up to welcome new immigrants, who are settling in the county, and who may have different challenges from other students. But one of the things you run into there is that even the people who work day to day with migrants in the community say, we're really running up against the kind of limit of our ability to service these people, to cope with these people. A big part of the draw in Gwinnett County or in places like it has been affordable housing. Well, as we are seeing in other parts of the country, the cost of housing has gone up significantly, and that's bred some resentment towards local or migrants who are arriving in Gwinnett County, the new migrants who arrive. So, there is this kind of complicated tension where in some of these welcoming blue counties, they're also struggling to deliver services. That's certainly something you see in places like Massachusetts, where there's a big debate now about the load of new migrants.
There sure is. As we underscore, and you already mentioned, though, few migrants are settling in some of the red counties that need them most. And by extension, few migrants settling in counties that saw GDP decline. Does that become a self-fulfilling prophecy as we move forward?
Look, I think increasingly in the U.S., and you can argue the world today, people are the key, and population is the key to economic growth, and that's, a huge part of American history as well. Through the 19th century, part of the reason that the U.S. grew so strongly through that century was just the huge amount of migrants who landed in the U.S. So there's a rich history of immigration leading to growth in the United States. And very much when you talk to economic development people on the ground, and I've done that around swing states this year, one of the key themes or the first question they hear from companies looking to set up there is, do you have the workers, right? And do you have the housing? Do you have the kind of skilled workforce that I need to do that? And we see this in Springfield, Ohio, in the debate as well there. The reason a lot of Haitians have ended up in Springfield, Ohio is because there's a lot of companies there who have been looking for workers, and the Haitians have found opportunity there.
Really remarkable, as you point out, in past decades, we might not have been able to get all of this information. More border crossers are turning themselves in to apply for asylum and eventually a work permit, which gives us, Sean, a better view of this than we've ever had, isn't it?
Yeah, look, and I think there's also, and some of my colleagues at Bloomberg have done some fantastic reporting around the immigration court system here in the United States and just how overloaded it is. So we should be clear here. Asylum seekers, you lodge an application for asylum, and then you can wait years to hear whether or not that is accepted or not. And during that time, many migrants do get work authorization as they're waiting to hear the result of their case. And if they are eventually rejected, then they are asked to leave the country. In Atlanta, you kind of see an interesting paradox there as well. This is something the people who work with new arrivals, new migrants on the ground were talking with me about when I was there earlier this summer. And that is that the local immigration court there is, in fact, one of the strictest in the country in terms of how it treats asylum applications. 83%, and this is based on a Bloomberg investigation that was done earlier this year. 83% of asylum seekers who have their cases in that Atlanta court are going to have their cases rejected.
Amazing. This is really important stuff. Sean thinks I compliment him for the fun of it, but this is Bloomberg at its best. Find the big take of Sean Donnan on the terminal and online. This is Bloomberg.
12:40 on Wall Street. We do check markets all day long here at Bloomberg. Just getting word that Volkswagen is cutting corporate jobs in China amid a sales slump. The Dow back in the green right now. Still a down day for the S&P. Well off session lows. Right now, the S&P is down by just about 10 points. A drop there of 0.2%. Nasdaq lower by 45. A decline of 0.3%. The Dow, though, in the green, as I mentioned, up 43 right now. Reversing earlier losses. Dow Industrials up by about 0.1%. 10-year at 3.72% with a 2-year that's yielding 3.57%. Gold up $38 the ounce. The precious metal at a record right now. Gold 26.24, up by about 1.5%. West Texas Intermediate crude oil up 0.4%, 72.25 for a barrel of WTI. Stocks are slipping after some disappointing earnings. Reports tempered the euphoria around the trajectory for interest rates. In Washington, a plan to trim a bank capital proposal is running into a wall of resistance at the agency that insures Americans' bank deposits. And with that story, here's Bloomberg's Vinny Del Giudice.
Call it Beltway drama. The latest draft, previewed by the Federal Reserve, cuts in half a 19% capital increase proposed for major banks, including Citigroup, J.P. Morgan, and Goldman Sachs. Today, Bloomberg News reports at least 3 directors of the Federal Deposit Insurance Corporation, the FDIC, opposed the Fed overhaul of the plan aimed at preventing bank runs. One issue, whether the reduction in capital requirements is a giveaway to Wall Street. Vinny Del Giudice, Bloomberg Radio.
The shuttered 3 Mile Island nuclear power plant in Pennsylvania is coming back. The plant's owner, Constellation Energy, will invest $1.6 billion to revive it, agreeing to sell all of the output to Microsoft as the tech titan seeks carbon-free electricity for data centers to power the artificial intelligence boom. We've got Microsoft shares trading lower today. A little change, down by about 0.3%. Perhaps the bigger story, Constellation Energy. That stock surging on this report, up by 18.6%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Balance of Power continues. Back we go to Washington. Once again, your host, Joe Matthew.
All right, Charlie, helping us walk our way through a Friday here on Bloomberg Radio. It's good to see you, sir, in New York. Welcome back to Washington and the fastest show in politics, where we turn our attention back to the campaign trail here in Kamala Harris on the road in the swing states. You can just picture the map now. Today, Atlanta, Georgia. That's the first event of 2. It's on to Madison, Wisconsin after that. And we do have new polling on the race today. And it's specific to the economy. Another interesting turn here that we've been seeing. We told you about the latest yesterday, University of Michigan Ross School. There have been several of them. Morning Consult showing Kamala Harris erasing the deficit that Joe Biden had on the most important issue in this campaign, the one we're told is going to decide the election. So AP NORC today tells us 4 in 10 registered voters. Not likely, but I'll give you this. Registered voters say Trump would do a better job handling the economy. Guess what? The exact same numbers say the same about Kamala Harris. 1 out of 10 don't trust either. None of the above. And this is a far cry from what we had in late June, to my point. Back then, 6 in 10 Americans disapproved of Joe Biden's handling of the economy. So it seems that we have evened the playing field here. And then you layer on Oprah Winfrey as we prepare to spend some time with our panel. Did you see this? I told you, reach under your seat. You get a car. You get a tax exemption. They didn't do that last night, but people were crying. My God, you can't do an Oprah Winfrey show without it being emotional. Even Matt Miller described it as emotional when I was watching Bloomberg TV earlier. And it was a star-studded affair. Remember when that was a sin in politics? Chris Rock, Ben Stiller, J-Lo, Meryl Streep, all there with J-Lo. And, of course, Kamala Harris and Oprah Winfrey. Do the cat ladies for Kamala have anything to add? Maybe the white dudes for Harris. All the groups that were doing the Zoom calls to raise money for Kamala Harris were part of this last night. And the Wall Street Journal says hundreds of thousands of viewers joined. It was a virtual event from Michigan. So, time well spent. Let's assemble the panel. Jeannie Shanzano is back with us today, Democratic analyst, Bloomberg politics contributor, political science professor at Iona University, alongside Maura Gillespie. Maura, it's great to have you back. Of course, BlueStack Strategies and Republican strategist. So, Jeannie, what do you think about this? You remember when our friend Rick Davis made the celebrity ad in the Barack Obama campaign? The idea was you don't want to get too close to Hollywood here. You can't appeal to people in middle America, regular folks at the kitchen table. But it's starting to look a little bit different in this race, do you think?
It is. I have to say, you know this, Joe, I am not a huge fan of these events, which are high-profile celebrity events. This was a bit of a tearjerker, though, I have to agree. This really was. Of course, it's Oprah. But, you know, I think given the state of this race, the location is critically important. Getting the message out is important. But I'm not sure the celebrity angle really adds much to it. I think it's much more important. Those phone calls that you were mentioning, that it was interactive, you had like phone calls coming in, those I think were much more critical. And you had people coming in and asking, or calling in and asking questions. And I thought one of the most notable ones was about the economy, that young couple who asked about, how are we going to pay our mortgage? What can you do to help us, essentially? A very attractive young couple. And I thought Kamala Harris's answer was a bit lacking to a certain extent, but it doesn't seem to have hurt her in the polls, at least yet, on the economy, where she seems to be humming along. But I thought those kinds of questions were much more impactful than the, you know, as much as I'd love to be there with all those folks, you know, I'm not sure it's going to move some undecided voters.
Well, Maura, I don't know if you were tearing up watching this last night, but I wonder your thoughts on this, because we hear repeatedly suburban women are going to decide this election, that this is the Achilles heel for the Trump campaign. And when you have Oprah on your side, you're getting into a lot of living rooms you might not be getting into otherwise on a Thursday night. Was this good politics?
Well, and I think on the women's issue there, you know, speaking to women, speaking to issues that women care about, but giving them a permission structure to consider Kamala Harris as a candidate for them to vote for, while maybe they, you know, down ballot are going to look towards Republicans or wherever they, you know, lie politically. But I do think that, unfortunately, as Trump continues, the former president continues to really attack women, and he has supported people and endorsed people who also attack women, it's not a good look, and is, again, just more reason for women to be turned off by what the Trump campaign is offering and what the MAGA wing of the party is offering. So yes, I think in that context, having this, you know, kind of fireside chat, you know, ladies talking on the sofa, you know, kind of a casual conversation setting like that, it could appeal to women voters, to moms who are concerned about the economy. But also, you know, I think that her evasion of answering questions directly is still going to be something people are wondering about. Well, they may feel good watching these things. They may still leave with questions about what is the future going to actually look like, though.
You know, Jeannie, it's been kind of the narrative today that this is part of the Kamala Harris approach. It's her style to sit down with a friendly interviewer or be in a certain more comfortable space to be able to share these stories and have these conversations. But it's kind of both of them, isn't it? I mean, Donald Trump was riffing on Gutfeld the other night. He's doing podcasts with this guy who gave him a Tesla Cybertruck and a Rolex watch or something. I mean, this is a different approach to media across the board. We're not sitting down necessarily with the hard-hitting news anchors and answering gotcha questions. We're going to the avenues that we're most comfortable with to appear as best we can in a certain light. Is that bad for the voter?
You know, it is fascinating how we have seen this shift. I mean, we hear consistently hardcore, traditional, I can call them, I guess, journalists who are bemoaning the fact that Kamala Harris, Donald Trump, all of these candidates are not doing traditional big sit-down television interviews as regularly as they would like. And yet, what are the campaigns doing? They're going where they find voters. And so, you know, I think it reflects larger trends, to your point, in the media environment. You know, I have to say, having kids myself, it is stunning to me that they very, very seldom will watch TV, but they're, you know, often on games, they're online, they're on the web. So, you know, you want to, you know, attract voters. that is where you go. So it is a shift in how these campaigns are operating that I think we're all going to have to get used to. I do think it is challenging for voters at the same time, though, because you've got a lot of material coming out and you've got a lot of material being posted. It's hard to catch up on what is being said to whom and when. And people consistently ask me, who can you trust? How do we know that this is not, fake news, to use an overused term, or not? It's really, really tough on all of us as voters. Where can we get sound information? Of course, we know, Joe, that's from you and everybody at Bloomberg. But despite that, it's a tough environment.
Well, I'll tell you what, though, and Maura, you're an expert on communicating politics to media, and I don't know if singing to the choir is inherently a problem. Sometimes these candidates say things they might not say otherwise. Did you hear this gun remark from Kamala Harris last night? It follows her debate performance recently, in which she informed all of us that she is a gun owner. Apparently, she's ready to use it. Here's Kamala Harris from last night.
If somebody breaks in my house, they're getting shot.
Yes, I hear that. I hear that.
Probably should not have said that. But my staff will deal with that later. Yeah.
Okay, so it's live at the Improv, Maura, but she just said if you didn't hear it, anyone breaks into my house is getting shot. Who's the audience for that?
I mean, I think it's moderate Republicans, to be honest, and maybe even some who are a little less moderate. I think it's trying to appeal. Again, her coalition building here is to show that she could be, in her words, president for everyone, for all Americans. Yeah. But what I will say, though, and this is where I think people get frustrated, and I will say, Republicans get frustrated, is that if a Republican man or woman was up there and said the same thing, that would not be the reaction. There would not be this, lighthearted laughter. It would be, not to be punny, but people would go up in arms about it because, they would say that that's aggression and reckless and all these things. Sure. So there is this idea that, we're not, considering it the same way. And I think that's going to rub Republicans in a way that's going to be frustrating to realize that it's okay for her to say that, but would it be okay for them to say it because of how they're viewed through a certain political lens? And especially in that audience, when you mentioned having Hollywood celebrities there and Oprah and things like that, if roles reversed, it wouldn't be received the same way. And that could be frustrating to people.
They all laughed at the gun joke. Maura makes a very important point here, Jeannie. It would be a very different conversation if J.D. Vance, Donald Trump, got up there and made jokes about shooting people, breaking into the house. Look, maybe we shouldn't be at that point in American politics, but this is where we are. How's that going to play next time something awful happens and we're doing the thoughts and prayers on social media?
Yeah, I mean, they have that to replay. Kamala Harris is, I think, obviously I agree with Maura trying to reach moderate Republican voters. I also would be remiss if I didn't mention that there are a host of women who feel insecure in this country and who want to own handguns and have protection in the home. And we don't often talk about that element. So, she is reaching out to all of those people, but to your point, we have another, God forbid, we have another shooting, and this can be replayed. So, that is the reality. And I also agree with Maura that if a Republican said this, the response in that room would be very different. And we should say Democrats feel the same way if they were in front of an audience and said something else. This is what I mean about these segmented media appearances that we're seeing and that are replayed on social media and elsewhere to the degree that they are. So that's what makes it very, very tough for people to get sort of middle ground information that they feel is objective and they can trust.
All right, well, good. Let's play that back. We've got a minute left. Play that back to Maura. Was that a line, Maura, then, for security moms? Was that actually an attempt to pick up new votes?
I think Kamala Harris was really talking off the cuff. She and Tim Walz, like you said, talked about both being gun owners at the DNC convention. So I don't think that, I don't want to say it too harsh, I'm just saying it factually. I don't think she thought that through in that sense. I think she was feeling casual, talking to Oprah about being defensive. Again, to Jeannie's point, wanting to remind women they have self-defense opportunities and options for themselves. But I just don't think that, again, roles reversed, and that's the frustrating part. I don't disagree, though. You have the right to defend yourself and your home if someone would break in. I'm not discouraging or just saying that that's wrong. But I just think that there is a hypocrisy about it, you know.
I'm with you, and I understand altogether. Great conversation and honest talk with Maura Gillespie and Jeannie Shanzano. Our panel on the Friday edition of Balance of Power. We'll have much more with our panel in our second hour as we welcome our global television audience to this conversation with more on the campaign trail and more on what's happening abroad. And we're going to be joined next hour by Nick Wadhams from our national security team for the latest on the standoff in the Middle East, the latest in Israel, in a conversation with Congresswoman Mikey Sherrill, the Democrat from New Jersey, will be with us on foreign affairs, on SALT, and a lot more. Stay with us on the fastest show in politics on Bloomberg.
Balance of Power. Live from Washington, D.C.
President Biden says he is still committed to a ceasefire between Israel and Hamas, despite the fighting at the northern border. Welcome to the fastest show in politics As we turn our attention back to the Middle East today, I'm Joe Matthew alongside Kaylee Lyons in Washington. And Kaylee, it's important as we meet at another dangerous moment here in the Biden administration refuting reports that this White House is giving up on a ceasefire.
Yep, they're still pushing for it, as they have been for months now. But the negotiations between Israel and Hamas potentially complicated by the state of relations currently between Israel and Hezbollah, another Iranian proxy. As we have seen, according to the Lebanese Health Ministry, an Israeli strike today killed at least 8 people in Israel.